Season 2 of The Circuit. We're walking with the titans of banking.
Hello! You guys love these meet and greet things.
Me too! And driving a warship through the Pacific.
You're not the typical Silicon Valley founder wearing a black turtleneck. Like, how does that play?
I am a little bit of a caricature.
Taking you around the world.
So we're kind of in the middle of nowhere. It's incredible that this is the site of the biggest Netflix production ever in Latin America.
And getting you closer to tech and business leaders like never before.
You have our money, you've got world leaders on speed dial. That's a lot of power.
Sometimes I think I'm just riding the Bronco and hanging out for dear life.
Fed's Mester says the US fiscal path is not sustainable and must be brought under control.
I'm going for like badass soccer mom.
I'm Emily Chang, your ticket to the front lines of tech, innovation, culture, and host of The Circuit. Wednesdays on Bloomberg Originals and Bloomberg TV.
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching The China Show.
This is Bloomberg Technology.
This is the countdown to the close.
Welcome to Balance of Power. This is Bloomberg.
This is Bloomberg Markets, and I'm Shonali Basak, and it's time now for the Wall Street Beat. And today we're looking at asset-backed finance and why it's such a hot topic in the world of private credit. We're joined now by Akhil Bansal. He's credit strategic solutions head over at Carlyle, where of course we know has a fast-growing credit business. You started this business about 3 years ago. It's now a $7 billion business. How fast is it growing now?
We're seeing tremendous growth in the business, and I think that is being driven by the market opportunity. We're seeing a confluence of factors that is pushing a lot of this high-quality lending off of deposit and taxpayer-backed bank balance sheets and into the private markets.
Is all of this opportunity driven by the banks, or how much are the investors themselves asking for new products here?
You know, I think it's both. One is you're seeing banks and not only banks, but specialty finance companies that originate loans and that we're selling them to community and regional banks. And you're seeing that bid for those loans evaporate. And so you're seeing private market firms, players like us, be able to step into that very large financing need, something that we estimate be on the order of $40 trillion of financing. At the same time, investors of ours are looking to diversify their private credit exposure, get exposure to outside of this private equity ecosystem. I think it's a combination of both.
What about, it's interesting, today alone is a good example of exactly what you're talking about, because you at Carlyle agreed to buy a $450 million portfolio from Sungage Financial. Tell us about that deal and what it says about where this market is going.
Yeah, absolutely. I think that's emblematic of exactly what we're seeing more broadly. Sungage is an example of a firm that originated a very high quality residential solar loan product. And historically, they were selling that loan product to a bank. That bank decided that it didn't want to buy any more loans. And so Sungage was looking for a partner to continue buying these solar loans that they're going to continue to originate. And so that's just one example of many transactions where we partnered with specialty finance companies like Sungage, who are looking for funding partners as their existing bank funding partners step away.
You know, when you think asset-backed, on the face of it, it feels safer. It feels like you're backed by a hard asset. But on the other hand, you're seeing a lot of firms like yours look to the asset-backed world and do things against assets that are not so tangible. And so how safe is the asset really?
You know, when we think about risk, it's all about upfront underwriting, focusing on high quality collateral with predictable, consistent, recurring cash flow, and then partnering with the right groups. And we're big on partnering. It's about partnering with banks, partnering with specialty finance companies to deliver this solution and to keep the liquidity going on in the market. And so when you have those three things, and we think at Carlyle, particularly given our broad platform, we have the ability to underwrite all this type of collateral, that's the important risk management you need to avoid losses.
To avoid losses, where are you staying away from at this juncture?
You know, where we're focusing more of our time is we have a thesis.
Financial Times reports that U.S. Defense Chief Austin is to meet their Chinese counterpart this month.
Or home improvement loans. even mortgages and second lien mortgages, because that consumer has done very well in this inflationary environment. The biggest component of inflation is the cost of where you live. And the person who owns their home with that 30-year mortgage who has a locked-in interest rate, they haven't seen the cost of their housing go up, but they have probably seen their wages go up. And so we think that demographic will be more recession resistant and more durable.
Are there places, though, that you would not touch? Because the consumer is an interesting place. To your point here, if you're a homeowner, you have a hard asset. But what about other types of consumer products? You're seeing some places look more at things like credit cards to get more excited about entering this market.
Yeah, you know, for us, it's about, do we have a data edge or information edge about that pool that we can underwrite? And if we do, then we can price that risk and we can underwrite that risk. So that's where our focus is at Carlyle's. Given our broad platform, where do we have some information advantage so we can underwrite that pool? Where we avoid is where we don't have that edge, because then we're no good as any other buyer. And so that's how we look at it.
It's kind of funny because we have this conversation all the time with you guys and your peers about, is asset-backed finance a portion of the private credit market, or is it something separate?
We think it's the new wave of private credit. What is private credit? It's about illiquid, non-tradable, directly originated, privately structured investments. And if you look at what asset-backed finance is, it meets each of those criteria. But it hasn't fit the rubric of what private credit has been defined historically, which is lending to sponsor-backed companies. So what we're seeing is this is the new wave of private credit. This is the expanded definition of private credit because it meets all those criteria.
What's the opportunity here? You kind of talked a little bit about one area that you are excited about, the homeowner, for example. What other areas can be of interest to you?
I think another area we're very focused on is C-PACE lending. This is lending against commercial assets to allow them to finance energy improvement and energy efficiency. And that's a broader theme at Carlyle. We're very focused on the energy transition. And so we think C-PACE is another type of lending where ultimately that lending is where you're the most senior piece of capital in those real estate capital structures is a very safe and attractive asset. And once again, you're backed by the real estate, the hard asset, which is also attractive.
And staying senior to the point that you're...
Exactly.
So what about the investor themselves? You were talking about more investors also driving the push into this world. What kinds of investors are these suited for?
Yeah, absolutely. I think if you think historically, a lot of talk has been about how insurance companies have been the big drivers of this asset-backed finance opportunity, and we do think that's the case. There are many insurance companies that are investing in the space, but what we're seeing is now interest growing beyond that, from pension plans, from sovereign wealth funds, and from other institutional investors. And there's two drivers of that. One is, I think in this higher for longer rate environment, investors are realizing that in the investment grade portions of these asset-backed finance structures, they can earn very attractive nominal returns. And then on the lower parts of the capital structure, that's where there's also attractive returns relative to other forms of private credit. So that's where we're seeing demand kind of expand from what was talked about as mostly an insurance kind of asset class now to expanding to other types of investors.
All a part of that global hunt for yield, all amid a banking system that seems to be shrinking. That is Akhil Bansal of Carlyle, of course, growing their asset-backed finance business. Now, before I let you go, let's take a check on the markets here because we have hit some fresh records here. I believe we have been wavering around that 40,000 level on the Dow Jones Industrial Average, with the S&P 500 still flying above that 5,300 level, up about 0.2%, and the NASDAQ 100 sustaining gains about 0.25% higher. Yield still below 480, though seeing a couple basis point move higher today, in the 10-year below 440, down to 437 on the day. That does it for Bloomberg Markets. Stick with us for Balance of Power and stick with us through the close. Of course, another day of exuberance in these markets, but that does it for Bloomberg Markets today. This is Bloomberg.
Do you feel like this age of abundance over the last few years of just how much was being made?
For my personal taste, I am thrilled at what I get to find every night if I have time to look for something. So I personally don't think too much was made. I think the customer will tell us when there's too much made and they won't watch things. And I think part of the misalignment I talked about before is imagine if things didn't get picked up or movies didn't get made that people didn't watch or go to see. That's how it used to be. The customer decided. I do think there's going to be less made in the middle price range. I think there's going to be more made in the higher price range because when you get to global events like Barbie or Oppenheimer or Super Mario Brothers, it's worth the investment, and it's clear that the audience is there and they just need to be given what they want. The middle, which ends up quickly on one of the services in a way that we're watching movies that we don't know how they got made or when they got made and all of that, I think that will probably be curated better, and I hope there's more inexpensive things that give more people the chance to express themselves and have their work seen.
South Africa's most important election since the end of apartheid focuses on infrastructure challenges, economic growth, and political fragmentation. Bloomberg's Jennifer Zabasaja reports live from key battlegrounds in Johannesburg, Cape Town, and Durban.
We think that South Africa is an exciting part of the world.
South Africa is a thriving and vibrant democracy.
There's a lot of expectation for the election.
Coverage begins May 27th on Bloomberg Television. Context changes everything. In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Voices are raised in the courtroom in New York. Welcome to the fastest show in politics. As cross-examination today in Donald Trump's criminal trial brings new drama and a new gaggle of Republican lawmakers there to support the former president. I'm Joe Matthew alongside Kaylee Lyons in Washington. Kaylee, you never know who you're going to see in the courtroom in New York.
No, we've seen a long list now of lawmakers from both the House and the Senate. Today, it's a lot of members of the House Freedom Caucus who are gracing the courtroom with their presence. You've got the likes of Andy Biggs, Eli Crane, Matt Gaetz, Lauren Boebert, Anna Paulina Luna. Am I missing anyone?
Did you say Matt Gaetz?
I did say Matt Gaetz.
Interesting timing for him with news on the Ethics Committee today. They're not matching, by the way, as some other groups had been matching, but they are delivering the same message, Kaylee, that this is a weaponization of government and that the case should be thrown out.
Yeah, of course, as you're alluding to other efforts on the part of Matt Gaetz or other things that avoid him, there's a lot happening on Capitol Hill, even as some lawmakers are choosing to be in New York for at least some of the day today, including efforts to hold the Attorney General, Merrick Garland, in contempt of Congress as Joe Biden decides to use executive privilege to withhold the William Hur tape.
Yep, that's right.
From getting in the hands of lawmakers.
We do have a lot of moving parts today. There's also a vote looming today. We thought it might happen yesterday, but today on this bill that would compel the U.S. to support Israel and essentially condemn the president's decision to withhold shipments of offensive weapons. That's likely to happen and call a lot of Democrats on the carpet before this day is out.
Yeah, and we're going to have more on what's happening inside Israel itself as you're seeing some rifts in the Netanyahu coalition government. We'll have more with our own Ian Marlowe in a moment and get some analysis on both the executive privilege question and what's happening in Donald Trump's case in trial up in New York with Robert McWhorter in just a few minutes. First, though, as always, we got to get a check on the markets with Charlie Pellet up in New York. Because, Charlie, we hit 40,000 on the Dow.
40K, another big round number for a lot of investors. For the pros, though, they will tell you it's just another number on Wall Street right now. Right to the numbers here with the Dow at 39,983, up by about 0.2%. S&P are also at a record right now, up 8 points, up 0.2%. The NASDAQ up 20. That is a gain of 0.1%. But absolutely right, record there on the Dow. 10-year, 4.36%. The 2-year, 4.78%. Spot gold today is moving lower, down 0.2%. 23.81 the ounce on gold. And crude, West Texas Intermediate, up 0.6%, 79.11 a barrel. But the bottom line here, the oldest of Wall Street's 3 main stock indexes, boosted by the prospect of a resilient U.S. economy, ebbing inflation, and robust corporate earnings. Speaking of which, Walmart shares are up by roughly 6% today. Walmart had another quarter of sales growth and said it now expects the full year to be slightly better than planned. Again, recapping stocks higher, S&P pushing up by 0.1%, the Dow right around 40,000. Balance of Power continues now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet up in New York, thank you so much. I'm Kaylee Lyons alongside Joe Matthew here in Washington. And Joe, it's pretty remarkable to see another great day if you're long equity markets. You got 40,000 on the Dow. We're north of 5,300 on the S&P 500. Stocks are at record highs. And yet continually, the current incumbent administration does not get credit for anything really going well in the economy. It's one of his biggest headaches, but we know it's just one headache on a very long list.
Well, that's true. Big thumbs down on the economy in just about every poll you see. Rick Davis said it earlier, Kaylee, if you had predicted 40,000 to coincide with this administration, people might have laughed at you in the throes of COVID, where we were when he took office. And if this were Donald Trump, he'd probably be at the New York Stock Exchange calling this his own. Yeah, that's right. No hats today, by the way. Kind of a bummer. I still have my 10,000 hats somewhere. You're alluding to other issues, though, and Israel is one of them. We've seen this take form in a lot of different ways on the campaign trail. But what's actually happening in Israel right now as we anticipate this vote today to compel the administration to provide weaponry is less to do with what's happening in Gaza now than it is what happens after the war is complete.
Yeah, whenever that after ultimately is, because of course we're still not anywhere in sight of an actual completion to this current conflict between Israel and Hamas. But we know what the U.S. has been pushing for is a two-state solution. That is not something that the Prime Minister Benjamin Netanyahu seems quite open to at this point, but it doesn't seem that everyone in the Israeli government has the same ideas on this, and you're starting to see that rift borne out in public.
Yes, very much so. Ian Marlowe is reporting on it for us. Bloomberg senior reporter covering diplomacy and geopolitics joins us at the table here on a post-war Gaza. Ian, is Benjamin Netanyahu becoming more isolated on this with time?
Yeah, I think so. I mean, I think he's stood alone for some time. Secretary Blinken, who I've traveled with around the region several times, has tried to corral sort of Arab partners in the region to get some sort of grand bargain to bring to Israel each time we go to the region. And each time we end up in Israel at the end of these trips, it seems like it just falls on deaf ears again. There's the day after plan is just not the priority for the Israeli government at the moment, for Netanyahu in particular. I mean, he's focused on destroying Hamas, on getting supposedly the hostages out as part of their deal, but anything that comes after that is just vague at the moment. And I think with the conflict dragging on as long as it has, 7 months now, there's a lot of impatience to see exactly what the reality is going to be like when we get to the other side of the conflict.
Well, I guess my question, Ian, is we've had a lot of conversations with people like yourself, with others who are experts in the Middle East and in Israel specifically, who have suggested that Benjamin Netanyahu has every incentive to keep this drawn out in order to preserve his own position of power. So I wonder if we do get to the point where we're talking about an after, whether or not he's actually going to be relevant to that equation. Because if we reach the after, is he still going to be in power?
He's very relevant to the equation. The question is whether he needs to be removed from power for that day after plan that the U.S. has to actually unfold the way the U.S. wants. And I think whenever U.S. officials go to Israel, they go to meet with the War Cabinet, and then they meet individually with different members of the War Cabinet. And I think that's a bit of a deliberate attempt, because a lot of the people in that War Cabinet want to be Prime Minister the day Netanyahu is no longer the Prime Minister. And so, and that's a reality that he faces. And Bibi also faces the fact that his coalition is very ramshackle. It's the most right-wing government moment in Israeli history. There are people well to the right of Netanyahu himself who say, if you do, if you agree to certain things in post-war Gaza, like a two-state solution, we are going to collapse your government. And on the other side, on the left, he's actually facing a little bit of a rising discontent there too, because in the wake of October 7th, there were all of the protests about Netanyahu and the judicial reform that he had tried to push through ended. And now there's kind of vague talk now of potentially having a general strike, pushing the government to get a ceasefire deal and other things. So he's being squeezed from both ends here. And I think you're right. I think a lot of people I speak to say, what the U.S. wants won't happen with Netanyahu in charge. And also this, the day the war ends, Netanyahu is out.
Right.
And so he has every incentive to kind of string this out.
So with all this noise, are you hearing that any other members of his war cabinet, Yoav Gallant or otherwise, are back channeling with the White House to their own benefit?
I think anytime one of them shows up in Washington, that sort of impression gets around, and it's hard to avoid. And now, with Gallant coming out and others supporting him, directly criticizing Netanyahu and his policies, it looks like to some extent that the starter pistol has been fired to some extent.
All right. It's great stuff. Ian Marlowe, as always, who reports on diplomacy for us here at Bloomberg. Thank you so much. And it's so interesting, Joe, to consider that not only are there international pressures on Bibi Netanyahu, including President Biden being more and more outspoken in his displeasure with the Israeli government's decisions now, but facing a lot of internal pressure as well.
Absolutely. This is an important moment. I feel like we're going to look back at this period of time in the middle of May as an inflection point in this process. I figure those covering the Trump trial probably feel the same way, actually. Yeah. Michael Cohen's back on cross-examination. June Grasso at Bloomberg Law is reporting that the defense probably will not let go of the reins here before the weekend because they want the jury to stay focused on their case, that they can probably wrap up next week. This thing is moving.
Yeah, keeping in mind there is no court tomorrow. It's Barron Trump's high school graduation, so there will be a day off. And then we're pretty quickly coming up on the Memorial Day holiday at the end of next week. So I do wonder how logistically all of this is going to work out. But of course, they have to actually finish witness testimony and then do their closing arguments before we can get to the end of things.
That's right.
And I just wonder what we're making of cross-examination day 2, or at least what Robert McWhorter is making of it. He is a criminal and constitutional law attorney. Welcome back, sir, to Balance of Power on Bloomberg TV and radio. The defense is spending a lot of time in this cross-examination trying to get Michael Cohen to admit that he has lied under oath in times past. He's been found guilty of perjury. He has spent time in prison. They're essentially trying to prove that he is willing to lie under oath. So why would the jury believe, based on this testimony, that he's not doing so again?
Well, because he's in a good position to give the information which the prosecution is built up to, and his statements are corroborated. I've said before, it doesn't matter if the jury dislikes Michael Cohen as a person. The issue is going to be whether they're going to believe what he says about Donald Trump and this situation. That is the cross-examination of him. However, the defense began with a whole different tack, which I thought was really ill-advised, where they started attacking him, saying, basically, you hate Donald Trump. And so the logical inference is you hate Donald Trump, ergo, you're going to lie to do anything to get him convicted. The trouble is, Mr. Cohen has a very good response, which is, I don't like Donald Trump, or I hate Donald Trump because Donald Trump has done terrible things, and I've gone along with it. And now that I've had my redemption and my little epiphany, I've seen the light, and now I'm not supporting him anymore. And by the way, when I was lying before, it was only on his behalf. That's why I'm here today. So overall, I don't think it works out all that terribly well for the defense. I have been in many trials where the government or the state has given immunity to a certain defendant to testify against the others. And the person might be a terrible person. The jury hates him. It doesn't mean they're not going to believe what they say, given the context of the case.
Robert, I wonder if raising your voice, bringing emotion as a defense attorney is a strategy. And I ask you that because Todd Blanche came in hot today. He was yelling at Michael Cohen, trying to get Cohen to yell back at him. And they had an important exchange here. Blanche highlighting this is the first time Michael Cohen has testified to having had specific telephone call, or at least one call with Donald Trump to discuss paying off Stormy Daniels. Yes, I believe I was telling the truth, Cohen said. What's the defense trying to do here?
Well, I don't think the defense is doing a particularly good job of winning the case with the jury. I think what the defense is trying to do there is make their client happy. And I think what they're doing is fulfilling their client's bigger goals. And I'm going to take kind of a unique tack on this that I haven't heard a lot of people talk about. I don't think for Donald Trump what happens in the courtroom is all that terribly important. What's important for him is what's happening outside of the courtroom and his ability to spin what's going on in the courtroom as his political strategy dictates. Look, he gets up after every court day and he complains that I should be campaigning. Well, if he's out campaigning, he's out talking to maybe a couple hundred people at a rally, maybe a few thousand, right? But he gets to talk to 5 million or more people every time he walks out of that courthouse and talks of free media coverage. And his themes are the same. So, for instance, with Michael Cohen, he can walk up and he always talks about, Trump derangement syndrome. Well, if you think about that, what that is saying is those people are crazy because they dislike me, ignoring the fact that those people dislike him because of what he does. So if your cross-examination of Michael Cohen is, oh, you just hate Donald Trump comes out and plays the same theme. And he ties it into this great conspiracy against him, and he's their savior of all the people out in TV land. That's what's important to Donald Trump. And his lawyers are accommodating this in their performance in the courtroom. And I don't think it plays well at all with the jury, but Trump has already decided it doesn't matter if he loses that trial, because by the time he gets sentenced, by the time appeals happen, he thinks he's going to be president of the United States. He's never going to serve a day in jail. I think that's Trump's overall goal, which is why he closes his eyes during most of the trial, whether he's sleeping or not.
Okay, so that's the considerations for the case involving the former president. I also want to ask you about something involving the current president, Robert, as we have had Joe Biden today exerting executive privilege over recording.
Shortly expecting the results of the Federal Reserve report operation.
Conversation with special counsel Robert Hur. Merrick Garland, the Attorney General, is about to be held in contempt of Congress over this, and we have seen executive privilege now basically used to make sure that this does not, in fact, get in the hands of the lawmakers who are asking for it. We have heard a great deal of upset on the Republican side about this, including from the House Speaker, Mike Johnson. Just take a listen to what he had to say earlier.
The president is using all of his power to suppress their release. And rather than defend our closest ally at war, President Biden is using his authority to defend himself politically.
So arguably, Robert, he is using authority that is his to use should he so choose, but is he setting a dangerous precedent here by not releasing these tapes?
No, not really. Look, first of all, executive privilege belongs to the office. It doesn't belong to Joe Biden. So when all of Donald Trump and his kind of entourage and his minions say, oh, I have executive privilege.
72 counterparties take $410.121 billion at the Federal Reserve report operation.
The next person who holds that office could decide to release whatever they want because the privilege goes with the office. Now, I think there's a good argument to be made that says, look, you already got the transcripts of what happened here. And you got a gratuitous statement from Robert Hur about, oh, he's old, he doesn't remember, which had nothing to do with his findings. Actually, the Hur findings were quite beneficial to President Biden. It draw the distinction between the two cases, President Biden's case and Donald Trump's case, in terms of retaining of documents. They're very, very different. But then he put in that gratuitous statement, which was simply to give fodder for this argument and the narrative that Joe Biden is not competent, too old, et cetera, et cetera.
Yeah.
Utterly useless in terms of what the report was supposed to do in the prosecutorial evaluation. So, that's kind of what the privilege is. This president does have it. I assume he decides that there's no value for the American people to have this come out, certainly not a value to him. And of course, Speaker Johnson then tries to tie that into something to do with Israel at the end, I assume, by his statement that, President Biden should be more worried about our allies versus this. That's a total non sequitur. It has nothing to do with either one. But that's kind of the political game I see going on there.
He straddles criminal and constitutional law, which is why he's an important voice for us here. Robert McWhirter, we thank you for being with us, sir. As always, on Balance of Power, I'm Joe Matthew alongside Kaylee Lyons in Washington. The word on this, by the way, transcript versus tape from Jim Jordan, of course, Judiciary Chair. Changes in voice inflection and emphasis are what you need that you do not get in a transcript. But he probably will never hear that tape.
Yeah. I guess that's why people watch us on TV and listen to us on radio, don't just read us,
That's
right?
true, actually, yeah. I hear this is a good listen still, even though we're on camera. We'll have more from our panel coming up next. This is Bloomberg.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
I had a big insight one day that women don't invest as much as men do. That, you know, we all think it's because they're risk averse, but maybe it was because nobody built anything for them.
The names that move markets are on Bloomberg.
It is President Biden's top priority to bring down the cost of living.
The United States' ability to spend without constraint is not unlimited.
We're in a very unusual time, and so the adjustments are taking place, and it's running through the economy.
We do need more innovation, more investment, single market and capital market union, and a relevant trade policy.
Bloomberg. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ off session highs with the Dow Jones Industrial Average topping 40,000 earlier today. right now 39,976, up 68, a gain right now of 0.2%. S&P up 4, little change now, up less than 0.1%. NASDAQ just turning negative, down a point now, down less than 0.1%. 10-year yield 4.37% with a 2-year 4.78%. Spot gold lower now by 0.2%, $23.81 the ounce. And West Texas Intermediate crude oil up 0.7%, $79.17 for a barrel of WTI. United Airlines no longer under an operational freeze put in place by government regulators, a sign of progress after a series of safety issues led to a clampdown by the FAA. Shares of UAL lower, little change today, down less than 0.1%. Bottom line here, we've got the Dow trading close to 40,000, up 42 right now, up 0.1%. We are off session highs. Balance of power continues now. Back we go to Washington once again. Your hosts, Joe Matthew and Kaylee Lines.
All right, Charlie Pellet with a look at financial markets today. Thank you so much. I'm Kaylee Lines alongside Joe Matthew in Washington. And we know that decisions out of Washington often do have the ability to impact financial markets, certain stocks, certain ETFs, like, say, rescheduling marijuana. I noticed today MJ up nearly 6% after just moments ago, President Biden takes to X. Too many lives have been upended by our failed approach to marijuana. So today, the Justice Department is taking the next step to reclassify marijuana from a Schedule 1 to a Schedule 3 drug under federal law. It's happening, Joe.
This is a big deal. It is actually happening. We've been talking about this for a very long time. And for the president to do a direct-to-video, direct-to-camera statement on this says a lot about the demographics he's trying to appeal to here, i.e. young people. MSOS is the other ETF that's specific to U.S. cannabis companies impacted by this. That's up over 8% right now. As our buddy Nathan Dean likes to say at Bloomberg Intelligence, the pot stocks have hot sauce on them, and they go crazy in both directions. So let's see if this holds.
Yeah, I guess we will. But to your point, it's not a coincidence in all likelihood, Joe, that this is happening in the middle of an election cycle.
That's right. Not to mention the fact that we're actually waiting for news on safe banking. There has been an effort to get this done largely by Democrats, but some Republicans are on board as well. Let's assemble our panel to get their take on this and all the other stories that we're covering today. Rick Davis and Jeannie Shanzano join us, Bloomberg Politics contributors here on Bloomberg TV and radio. We didn't see this one coming, guys, but here we are. Jeannie, it's just another. You can talk about forgiving student loan debt or some of the other ways that Joe Biden has tried to appeal to younger voters. In this case, does it work? And with whom?
You know, I don't see this as changing the trajectory of the election. Marijuana legalization is something, to your point, young people support in overwhelming numbers, and they long have. That said, it doesn't usually rank at the top of their list. Still at the top of their list is the economy. So I think this is important, as you guys were just talking about.
But this has to do with promises kept, doesn't it, Jeannie? Promises kept on the campaign in 2020.
It does have to do with that. I'm still not convinced it will change support. I think much more important is going to be his taking on economic issues that matter to these young people, and they are enormous. So I think this is a positive step. And you're right, it does meet a campaign promise, although I just really still don't see it as going all the way to change votes, if you will.
Well, fair enough. Obviously, young people are one demographic in which President Biden is seeing turn away from him. Rick, another is black voters, and he is arguably trying to take some corrective measure in that regard as well this week, as he today is meeting with family members in the Brown versus Board of Education case. He'll be doing another event here in D.C. at the African American History Museum later this week. He's giving the commencement address at Morehouse this weekend. Does any of that go far enough? How much work does he still have to do?
Yeah, look, I think that we heard from Dr. King this week that you got to walk the walk. You got to be there all the time. It's not just an election year issue. And I think she's exactly right. I can't imagine anybody walking the walk more than Joe Biden has. But again, I mean, I have to echo what Jeannie just said. I mean, this is all about the economic situation that young, black, especially urban males find themselves in. And it's not good. And they're blaming the Biden administration, right? They didn't have as many pressures on them economically during the Trump administration. They had other cultural challenges that that exacerbated themselves in the Trump administration. But for whatever reason, those seem to have, fallen by the wayside. And now it's a battle with Joe Biden over the economic well-being of the Black community. And these are core Democratic voters. So if he loses them, he's really got a problem with his base. It's not just swing voters anymore. And I would say I don't think the cannabis issue plays out really very much. I consider it a feel-good issue, right? In other words, it fulfills a promise, it does what you need to do to sort of get over it. But there are very few young voters, very few urban voters, very few voters who, are in the Biden coalition who are going to vote for Donald Trump unless he, legalizes pot, right? That's just not a voter that exists in any poll I've ever seen. So the challenge with Black voters this week, he's showing some leg on it, but the question is, can he meet that challenge by being able to at least articulate a better economic opportunity for that community in the next 4 years? And again, where's the plan for the next 4 years economically? All we hear about is getting past tomorrow.
Well, speaking of a feel-good issue, how about a presidential pardon? Not for those convicted of smoking marijuana, but for Donald Trump. Mitt Romney, of course, the former standard-bearer of the Republican Party, thinks that's exactly what Joe Biden should do and should have already done. He talked about it in an interview. Let's listen.
I think President Biden made an enormous error. He should have fought like crazy to keep this prosecution from going forward. It was a win-win for Donald Trump. Had I been President Biden, when the Justice Department brought out indictments, I would have immediately pardoned him. I'd have pardoned President Trump.
That was in an interview with MSNBC. Jeannie, what do you think about this? I'm pretty sure Joe Biden was not about to pardon Donald Trump. What would the reaction be?
I'm baffled by this for several reasons, but let's just start with one, which is the fact that while a pardon can reach to the federal cases, those federal cases are not going forward, apparently, in all likelihood, before the campaign. For the election, rather. The only one that has is the state case. And of course, Joe Biden has no say in what the state of New York does or the state of Georgia. So I'm not quite clear on what Romney's getting there. What I do agree with him on is the fact that Democrats have to fight Donald Trump at the ballot box and not rely on the courts. That said, there's no evidence that Joe Biden has been part and parcel of this prosecution of Donald Trump. So I don't know how he stops it other than getting involved, which no president should do.
But one of the other things that Senator Romney said, Rick, is that this is a win-win for Donald Trump. Does he not have a point there that so far the prosecution of the former president has only served him in his campaign for the White House?
Yeah, hindsight is 20/20 vision. I think you can now look at and say advantage Trump when it comes to at least the current status of his legal problems. If he doesn't win an election and he gets convicted and he winds up serving time in prison, I don't think anybody's going to say that. But that's not where we are today.
Fair enough.
And I would say very clearly that Senator Romney isn't claiming that Joe Biden has anything to do with these prosecutions. If anything, I think he would say that this proves that no one is above the law. But I think what he's trying to get to is a return to civility, a return to a dialogue that is not so detrimental to our national interests. And that only gets achieved by people making sacrifices. And in this case, the sacrifice would have been the president's to basically reach out with the power that he has to grant a pardon to somebody who highly likely at the time was going to be the nominee of the party. And I think there's something about national unity and rising above it and serving causes greater than your own political self-interest that would have inured greatly to Biden's advantage. But that's not where we are. And that gives the cudgel to Donald Trump to then use his prosecution against Joe Biden. And so that's just fair, right? I mean, it's his Justice Department that has indicted him while he's a presidential candidate. And, arguably, he's done things that are wrong that have inured to this. He is a court of law going to decide whether he's guilty of these things or not. But does that really advance the national dialogue the way we would normally want to see it? I doubt if any voter would say, yeah, that's Republican or Democrat alike, that this is a good place where we found ourselves.
What's really interesting, Jeannie, what's your thought on that to come back around? Could Joe Biden actually turn a few independent voters his way, just the optics of doing what appears to be best for the nation?
I don't think it would change voters' minds. I think he would probably risk losing as many as he may gain in the middle. And I think, what Rick is talking about, I think is an important point. I don't think it would help Joe Biden, in other words, politically at this point in terms of the election, but for the better interest of the public good, it may be something worth considering. But again, this prosecution, we're seeing the hush money, is a state court. He has got no reach there. He could take action potentially on the federal case. It's very unusual to do before the man has even been convicted, and nothing would happen before the election. So, I see Senator Romney's point, but I think it's a little bit too late to think about something along those lines.
All right, Jeannie Shanzano and Rick Davis, our signature political panel, thank you so much. And it is an important thing to consider here, Joe. While Donald Trump wouldn't be able to pardon himself if he wins re-election in the state cases, just the federal ones, we don't even know if the federal cases will ever move forward.
That's
They're
true.
Delayed indefinitely at this point.
We have to remind ourselves that we're still waiting for a very important ruling from the Supreme Court on presidential immunity that may or may not lead to a Jack Smith January 6th trial. That would be a potential game changer.
Yeah, well, we'll know, we think, by June 30th when it's the end of the term, but they could always kick it back down to a lower court and just elongate this process any further. We'll, of course, keep you updated when we get news. We just don't have it quite yet. There's a lot of other news out there, though. World and national news with Amy Morris in the 99.1 newsroom here in Washington is up next. Amy?
Thank you, Kaylee. President Biden has exerted executive privilege over recordings of his interview with special counsel Robert Hur at the center of a Republican effort to hold Attorney General Merrick Garland in contempt of Congress. House Judiciary Committee Chair Jim Jordan says he does not trust those written transcripts.
The department's refusal to produce the audio recordings of special counsel Hur's interviews with President Biden amounts to a demand that the committee trust that the department created and produced interview transcripts are actually accurate and complete.
The White House says the GOP is being political. Donald Trump's criminal hush money trial could wrap up soon. Prosecutors have indicated they plan to rest their case once Michael Cohen finishes his testimony. Cohen, Trump's former attorney and so-called fixer, is now on the stand for a third day. Now, the defense has said it will only call a handful of witnesses. They have not said yet whether Donald Trump will testify. Justice Juan Merchan has told the jury that court might actually have to be in session next Wednesday. We're watching that. Meanwhile, outside the courthouse, about a dozen House Freedom Caucus members criticized the trial and the gag order on the former president. And looking at the PGA now, Xander Schauffele has just broken the PGA Championship scoring record with a 62 and has tied a major championship record. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
You actually offer a payout at 7 years to encourage people to explore if they don't find themselves in management position. I mean, what's the thinking? I mean, like, what's that about?
We're not forcing everybody to, be kicked out, right?
But you encourage people to explore.
Exactly. We encourage people to think about their, because sometimes it's easier, even for me, if I don't need to change everything, it's easier, right? Change is really tough thing for everybody. Should I do this job for next 5 years, 10 years, or should I try a new thing? If I had to think, that is a great opportunity to think about it. We need to think about what kind of talents I can have. for the next 5 years, 10 years, what's the best way to contribute to the world?
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question.
Best question I get all night.
Bloomberg. Top experts. Great questions.
The biggest risk in property and casualty, is that now climate change?
Yeah, so absolutely. When you look at natural catastrophes, the number of events has significantly increased, and not only the very big events like hurricanes, but also what we call secondary perils, so wildfires, floodings, and drought. And this leads to the fact that you have far more events and therefore a much higher cost of all of the natural catastrophes.
How do you really assess the risk of climate change? Because how can you possibly know whether there's going to be a hurricane or a flood? It's just based on the past or the projection of the future? Or what, how do you do that?
Since the dynamic has changed, we need to also look forward. And what we do a lot, we work a lot with scientists who understand what the warming of the Earth and climate change will mean for the question of taking risk. And secondly, we take much less risk than we used to take because we have to be careful.
So let's suppose there are a lot of hurricanes. Is that good for property and casualty insurers or not? Good because people say, well, there's going to be more hurricanes, I should buy more insurance, or not good because you got to pay a lot of claims?
It depends. I would say it's good because it creates the awareness to do more prevention. What we see today is that, as I said earlier, there is more events. It becomes more and more difficult to insure, and therefore we work a lot with our customers around preventions.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. From the world of politics to the world of business. 2 times a day at 1 p.m. and 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world twice a day at 1 and 5 Eastern, only on Bloomberg TV and radio. Context changes everything.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. After eclipsing the 40,000 threshold, the Dow now only up by 10 points, 39,917. Little change right now. We have got the S&P 500 index also little changed. In the red, down now by half a point, while NASDAQ is down 7, a drop there of less than 0.1%. Bottom line here, U.S. stock market giving up earlier gains. 10-year, 4.36%. The 2-year, 4.78%. Spot gold down 0.2%, 23.80 the ounce. And West Texas Intermediate crude holding on to a gain of 0.8%, 79.23 for a barrel of WTI. Those so-called meme stocks fading again for a second day. GameStop, case in point, down another 22%. Also trading lower, AMC Entertainment down now by 10%. Again, recapping, little change for the U.S. equity market. Right now, the S&P up by just about half a point. Balance of Power continues now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lines.
All right, Charlie, we thank you. Big day in the markets here. We'll get back with Charlie before the end of the hour to see how we're doing on this 40,000, Dow 40,000 day. It's kind of amazing to see this happen, Kaylee, as we were discussing earlier. Is there a tweet or a post from the White House on this yet? Because Donald Trump would have been playing this up big time.
Yeah.
And it would probably resonate in the polls. And I only ask that because the president has struggled to connect the dots on all things economy. And I realize they're two different things.
According to the Wall Street Journal, the US blocks imports from 26 more Chinese companies over forced labor concerns, and US stocks cut gains, all indexes last trading flat.
Noting that the Dow did just hit 40,000, the highest level ever recorded in history. So they heard you,
They took
Joe.
a swing at it. Yeah. I mean, we've been on the air for a little bit here. I'm glad to always know that they're listening. Glad that you're with us as well on Bloomberg TV and radio as we come off a couple of brutal days of testimony. Day 2 in the Senate today, wrapping up, Kaylee, for the head of the FDIC. And of course, this has everything to do with a report that was submitted last week, an independent report highlighting a toxic workplace culture at the agency. And there are resounding calls on Capitol Hill for Mr. Gruenberg's resignation. We heard from him a bit earlier in the broadcast. Bloomberg News spoke with Senator Catherine Cortez Masto of Nevada about her take on this. Here's what she told us earlier on Capitol Hill.
It addresses the workplace culture and the structure when it comes to protecting these employees. And so those recommendations, to me, that's the action items that they need to be taking, and they need to be implementing them, every single one of them, not questioning them like the previous report under the previous chair questioned some of the recommendations that were made and challenged them. That should not happen in this case. They should be saying yes to every single recommendation and implement it. To me, those are part of the action items those federal employees need to see.
Democratic Senator Catherine Cortez Masto on Capitol Hill earlier, and we go there now live, where we're joined, I'm pleased to say, by Republican Senator Joni Ernst of Iowa, who also has introduced legislation that relates to the issues at the FDIC. Senator, thank you so much for joining us here on Bloomberg TV and radio. In the face of the reports like the one we have gotten out of the FDIC, you, together with a Democratic colleague, Kirsten Gillibrand, have introduced the No Taxpayer-Funded Pensions for Sex Criminals Act. Essentially, this legislation would prohibit sex criminals from collecting taxpayer-funded pensions. My question, Senator, is the chairman has not been accused, actually, of any crimes, just perhaps having a role in allowing this kind of environment to continue at the FDIC. And there's been a lot of calls for his resignation. Does he deserve to collect a pension?
Well, and no, he has not perpetrated any of the acts that are covered by this legislation. So two separate issues. One is he is a very poor leader. He enabled this type of culture to occur at the FDIC. So I'm actually calling on him to either resign or President Joe Biden should fire him. But second is the act that I have drawn up with my colleague, Senator Kirsten Gillibrand of New York, that would stop taxpayer-funded pensions going to those that are convicted of sexual harassment. So two separate items, but man, they come together in a nexus at the FDIC, because we have seen those that exist within the FDIC pushing sexual harassment, unwanted sexual contact, illicit photos texted to females within the FDIC. So I think there is a lot to uncover here. We saw that independent report, over 340 pages of horrible, horrible frat boy type behavior happening at the FDIC.
Yeah, there's been a lot of references, Senator. It's good to see you again. We haven't caught up since we were in Iowa. A lot of talk around Washington about locker room talk and locker room behavior. And it was just in May of last year that a jury found Donald Trump liable for sexual abuse. If your bill became law, would that remove his pension?
Well, it's quite possible, but what we're focused on is those that are out there, those that have been convicted of that, and then, yes, they would have their pensions stripped away. It's a behavior that has to stop. So we see this in the FDIC. We see these federal employees that are really suffering. And again, I want to go back to the FDIC chairman and how he allowed this behavior to continue. Complaints were made to the FDIC, complaints that he either knew about or just simply dismissed. He himself had bad behavior, yelling at employees, throwing objects, all very, very poor exhibits exhibits of leadership or lack thereof. But again, bad behavior, we need to make sure that those that are in leadership positions in the federal government know and understand that they can't take advantage of their employees. If they are convicted, they will lose their taxpayer-funded pensions. End of story.
Well, Senator, if I could just go back to the fact that you just said it's quite possible if this were to become law that Donald Trump could not continue to collect a federal pension. He wouldn't be eligible for that, but still should be seen as qualified to collect a presidential salary back in the Oval Office come January of next year?
Well, different issues, because this is an elected position. If people want him to be the president of the United States, and I fully believe that he will be the president of the United States, then we will see him serving. Again, a little different issue, a little different take on it. These are people that are hired by the federal government, working in an environment where they are assaulting other employees of the federal government. It is up to the federal government to protect those employees. One way we do that and we make sure that this behavior doesn't happen is by letting them know up front, if you are convicted of these crimes, you will be stripped of that pension.
We're spending time with Senator Joni Ernst on Balance of Power. I'm Joe Matthew alongside Kaylee Lyons in Washington. I want to ask you about a couple of other issues while we have you here, Senator, including the idea of raising tariffs on China. This is something that Joe Biden chose to do this week while maintaining the Trump tariffs on China. And it's something that Bloomberg discussed with Jamie Dimon, of course, from J.P. Morgan Chase. Let's listen to what he said.
I think it's the right thing for America to fully and deeply engage with China, competitively. Every nation is going to do what's in their own interest for national security. So should America. We should define that fairly and properly. If there's unfair trade, negotiate that or do whatever you need to do. But the engagement is the right thing to do.
Engagement is the right thing to do. Senator, how do you have both?
It's really difficult, but we have seen President Donald Trump do the tariffs. He focused very heavily on correcting the actions for my Iowa farmers, and I felt that he was very strong on that. We see now President Joe Biden doing this, and what he is trying to do, he's focusing more on electric vehicles and chips and not focusing necessarily so much on my farmers in Iowa, but certainly when it comes to China, we have to be very cautious. We want to disengage where we can on items of national security importance, whether that's pharmaceuticals or items that go into our defense industry. I think it's extremely important, but we also need to make sure that we're looking out for our interests here in the United States, that we continue to develop domestic manufacturing. We need to quit leaning on China. They are bad, bad trade partners. And we have seen this with, I'll give an example of my Iowa farmers. China will negotiate on some soybeans coming from the state of Iowa. Those soybeans are shipped by our Iowa farmers. They're heading over the Pacific Ocean. China will cancel the order, then renegotiate for a lower price on soybeans or whatever other commodity it might be, and the Iowa farmers are stuck with it. This is where President Trump really stood up and did the right thing by the Iowa farmers, correcting that action with those tariffs. So we're going to see more of this. We're going to see a lot about this talked about before we go into the election cycle. I wish that we would see more engagement, pushing back on China, whether it's President Trump, whether it is President Joe Biden.
Well, Senator, as you talk about the farmers in your state of Iowa, are you not concerned that if this is pushed too far, these tariffs go too far, that they could fall victim to retaliation from China?
Yes, this is one thing that was brought up again when President Trump was in the Oval Office. I had an Iowa farmer that actually laid it out, and he said, he slapped his hand on the table, and he said, I know this is going to hurt for a while, but he said, I am so thankful for President Donald Trump. He's actually standing up for American farmers. He is correcting this action. So while the pain may be short term, we are going to find other outlets for corn, for soybeans, for pork, for beef, for poultry. We are going to find those other outlets. America can produce. China needs it more than America needs China consuming it.
Senator, I'm getting the hook here, but I just have to ask you quickly in our last couple of seconds, are we going to get a new farm bill this year? You keep referring to my farmers, or will they extend the one in place?
Yes. Oh, Joe, we are really struggling with the farm bill this year, and it is a $1.5 trillion price tag in the United States Senate, but only about 14 to 15% of that goes to farm programs. We need to rename the bill. We're not going to pass it this year. We'll take another shot early next year. We'll have to extend the 2018 farm bill. It's a disappointment for sure. It's a disappointment.
Please come back and talk to us about this. It's important to our listeners and viewers, just like it is to you. Senator Joni Ernst, we thank you for the time today here on Bloomberg and Balance of Power. Fascinating, a couple of unexpected answers there, especially when it came to Donald Trump.
Yeah, saying that potentially if the bill she's introduced becomes law, he could lose his federal pension for having been found in a civil court liable for sexual abuse. But she obviously still has full-throated endorsement for the former president. She'd like to see him be president.
So with that and all the shenanigans that we're seeing in the courthouse in New York, the storyline remains intact that Donald Trump has a more organized, a more mature campaign apparatus, and they're doing business differently now than they did the last two times. And that's what we wanted to talk about with Saleha Mosin, who's featuring this in the new Big Take DC podcast.
Yeah, she, of course, is the host. She's also senior Washington correspondent for us here at Bloomberg and is joining us now in studio. So this is the third go-around for Donald Trump, 2016, 2020, 2024. What makes this cycle different in terms of the organization itself?
It's a lot more organized. In 2016, now we have to remember that was the first time Donald J. Trump ever ran for public office. A lot of times when we have a first-time presidential candidate, they've run for mayor, they've run for a Congress position, they've run for governor. He had never run for anything, and he won in 2016 with the Electoral College vote, but it was chaos. He had Corey Lewandowski is the campaign manager one day, then Kellyanne Conway, then Paul Manafort. Now, after lessons of chaos in 2016, losing in 2020, with 2024, it's a steady ship, but he has great poll numbers. So he's in a great mood. He zipped up the GOP nomination in March, which was their target from the get-go, months before he needed to. And in all the key swing state polls, he's ahead of Joe Biden.
Is the campaign organizing these courtroom visits that we're seeing today? It's members of the Freedom Caucus. We even saw the Speaker of the House. Those vying for vice president are showing up at the courthouse in New York. Rick Davis was shrewd earlier talking about, look, if this were any other campaign, the candidate would be going to where these people are. But since he can't, they're coming to him. Would that have happened in a different apparatus? Is that this campaign at work?
Absolutely. We've got Susie Wiles, who's the campaign manager, Chris LaCivita, who is a senior advisor, pulling these strategy sessions, coming up with a strategy that seems to really be working because they have to look at the candidate's calendar. Right now, he is in a courtroom day after day. There's no cameras. There's no recorders. How is he supposed to talk to the public? Well, one day on his way to the courtroom in Manhattan, he stopped by a construction site and signed a bunch of MAGA hats for workers. Another day, he came out on the court steps and touted his really great poll numbers.
Well, of course, we got news this week that he will have more opportunity to address the American people, or at least those who decide to watch a presidential debate on CNN on June 27th, the opportunity to actually debate Joe Biden. But that's Donald Trump up there alone on that stage. Will we see as much discipline with the candidate as we've seen with the campaign when he has an option to speak freely?
Keely, you're honing in on the question at hand. What this campaign is doing, they're letting Trump be himself. There is no one trying to curtail his style. His rhetoric is still as bombastic as it was before, and his supporters like it. His rhetoric is just the way his supporters want to hear him.
Big Take DC podcast drops a little bit later on today. What else are we going to hear? Who are you talking to?
We talked to Anthony Scaramucci, who was the White House Communications Director for 11 days, and then Bloomberg's Nancy Cook.
So the podcast is longer than one Scaramucci.
It is long.
I just want to make sure that's great. We're loving this. Thanks for joining as always. It's every Thursday. If you haven't subscribed, do it already. Just like when you do to ours on Balance of Power, Apple, Spotify, wherever you do your podcasts.
Indeed. It's a great topic this week. This is something we've talked a lot about, Joe, this idea that this campaign is very different to the way we've seen Donald Trump campaigning in the past, which, of course, he's done twice.
Well, we're going to carry on this conversation in the later edition of Balance of Power. Starts at 5 o'clock Washington time. Thanks to Robert McWhirter, Senator Joni Ernst, our panel, Rick Davis, and Jeannie Shanzano. We're just getting started here in Washington, and it's almost time for Bloomberg Business Week in New York.
This is Bloomberg.
The top names in global leadership are on Bloomberg.
The ultimate goal of doing away with the central bank still stands. The discussion regarding the central bank is primarily moral in nature. The way we see it, there has been a cultural change in Argentina. Today, wages are miserable, not through our own fault. That is due to 20 years of populism. Argentines have understood that populism is no solution, and that the quick fixes they sold to them during the last 100 years, both the criminal politicians and criminal economists, they were all false. And we need to opt for a pure orthodox market-based solution. And that's what's going to make us succeed. And that's what's underway. In fact, there are already indicators today that show that activity in the agriculture sector, in the oil and gas sector, in mining, well, our economy is recovering strongly in those departments. There are indicators that point to the fact that Argentina could really make a strong comeback.
Nobody covers the top global leaders like Bloomberg Television and Radio. Context changes everything. Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, Tuesdays, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec. on Bloomberg Radio.
And a very good afternoon, everybody. Live on radio, TV, YouTube, Bloomberg Originals. This is Bloomberg Business Week on this Thursday, May
16th.
16th.
Yeah.
Man,
what do you think?
Half of
Time
May
flies.
over. Time flies when
It's
you're
your
having
Friday.
fun.
You're gone tomorrow, so
I am in such
you're like in relax
a Friday mode.
Yeah.
I'm Carol Massler. He's Tim Stenivek. You get a record, you get a record, you get a record.
Oh, thank you.
feel like it's records all around this week. Dow hitting 40,000. We're back below that. We'll talk about the markets in just a moment. Got the S&P heading toward its 24th record this year. We'll see if we get across the finish line on that. But that is, Tim, kind of our broad market backdrop.
Okay, well, we also got the big bank CEO that everybody listens to. We're talking none other than Jamie Dimon of JP Morgan Chase. He's going to weigh in on the market run-up, inflation, and more. You're going to hear from him in just a few minutes.
Plus, we've got two gainers on your radar on this Thursday. Attention, Walmart shoppers. Thank you, Tim, for that line. Walmart shares are the #1 gainer in the S&P 500 today. Walmart surging, topping $500 billion when it comes to its market cap for the first time. We're going to dig into the reasons why. And then we have Chubb.
Yeah, also rallying today thanks to a buyout boost by buying boost, I should say, by Warren Buffett's Berkshire Hathaway. We got that news late yesterday. We're going to dig into a little bit why the Oracle of Omaha, as they call him, is buying shares of Chubb.
They love insurance, right?
They really
have for
do.
a long time. Hey, we're also going to get into the cover story of Bloomberg Business Week, a new issue out. It's about 23andMe's fall as mass market genetic testing fails to take off. Great deep dive into that country and really that industry overall.
And one more thing, Coca-Cola, well, we've got a problem, at least when it comes to those bottle caps. We'll tell you what's going on.
You can get hurt in the process. Kind of, maybe not. All right, we're going to get into it. First up, though, let's get a check on that trade today. Charlie Pellets is here. And Charlie, offer highs of the session.
Indeed, and perhaps the big story today, Dow 40,000, covering it on the way up. We'll cover it on the way down. Right now, we have got the Dow up 21 points, holding on to a gain here, 39,931 on the Dow. S&P getting kind of sloppy in the past hour of trading, swinging between gains and losses. Still looking at a 2-point gain to 53.10, up less than 0.1%. NASDAQ just about flat on the day now, higher by 2 points. 10-year, 4.36%. 2-year, 4.78%. Spot gold down 0.2%, 23.81 the ounce, while West Texas Intermediate crude up 0.9%, 79.31 for a barrel of WTI. Going to be talking a lot more about Walmart. It did have another quarter of sales growth and said it now expects the full year to be slightly better than planned as the big box retailer attracts consumers looking for essentials and discounts. Right now, we got Walmart shares higher. Walmart up now by 7%. GameStop down 22% right now. AMC Entertainment as meme stocks sell off. AMC down by 11%. Recapping, S&P higher, could see a record today, up 1 point right now, little changed. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, all right, that's your market setup on this Thursday. Let's get to Walmart shares. As we talked about at the top, surging, pushing the retailer's market value over $500 billion for the first time after it posted stronger than expected first quarter earnings and boosted its annual sales and profit forecast. So we wanted to know more. It's the e-commerce business, it's the store business, it's the average ticket spend. There's a lot going on, Tim, when we talk about Walmart.
Also the outlook. We welcome Bloomberg Intelligence Senior Retail Staples and Packaged Food Analyst Jen Bartashis at Bloomberg Intelligence headquarters in Princeton. Okay, Jen, break it down for us. Investors certainly loved it, but what did we learn about the business today, and what can it tell us about the broader economy?
So we learned a couple of things about the business today. The first is that some of the investments Walmart has been making are really starting to play out. They're able to consistently grow operating income ahead of revenue, which is a great story for them to be able to tell. They're gaining market share, and ultimately their e-commerce businesses are really showing signs of taking off. So all of these things together really are working for the company. We're also seeing that consumers are still value focused, and Walmart is offering that value to people, not just from a price perspective, but also from things like convenience, and that's what's helping to draw in some of those higher income households that they've been talking about.
Well, when it comes to what they expect in terms of adjusted earnings, coming at the high end or slightly above its original guidance of $223 to $237 per share, revenue growth of 3 to 4% for the full year. Was it analysts just too low on it, or that's kind of what the business was, and Walmart's just surprising and doing better than everybody really thought? And they thought maybe.
Yeah, well, Walmart, came into the year with their initial guidance a little bit conservative because it was really unsure where the consumer was and where they would be. So, today they nudged up that guidance a little bit. They're at the high end of their previously stated range. I wouldn't be surprised if at second quarter earnings they actually adjust their guidance for the full year. But it's really, they're staying a little bit conservative just because there are a lot of factors at play that affect consumers still.
Listen, they're massive, right? And they certainly play into a certain sect, I would say, I think it's fair to say, of the consumer, although we've known, coming off the pandemic and just other times that we feel like their customer base has widened out. What do we know really about the demographics of who is the Walmart shopper?
Well, historically, you would have considered about 50% of their customer base to be in that lower income household type of demographic. But today, what they talked about was that when they divide their demographics between those who earn under $50,000, those $50,000 to $100,000, and households over $100,000 a year, it's about a third of their business each. So that's a meaningful shift in the way that their consumer base. And it really does bode well for them going forward that they should be able to retain some of those higher income consumers who tend to spend more and they tend to buy more discretionary items as well.
Hey, Jen, those higher income consumers, those folks who earn more than $100,000 a year, are they flocking to Walmart right now because they're looking for value, or is Walmart doing a good job of offering items that those wealthier households tend to go out and shop for? Which one is it, if you were to say it's one of these things?
Well, I would say initially, when we had really high food inflation, it was the price draw. But Walmart's been investing in upgrading their stores, improving the customer experience. And once you got those customers in the door, they saw that there were other changes that were happening with regards to merchandising that is appealing to them. So it's a story of two parts. The first part was price, and now it's also about service and convenience. That leads into that omni-channel e-commerce growth of over 21% from a global basis. People like the idea of being able to order, have it shipped to their house, or pick it up at curbside, and that's really driving a lot of the interest in the company.
Yeah, talk a little bit about that. How is Walmart Plus doing, especially when compared to Amazon Prime? How do you look at these two programs together?
Well, it's a good question. When I look at Walmart Plus, it's really about locking in loyalty. The majority of the use is for things that are shipped to home and a lot of grocery orders. You can order unlimited amounts, and have it delivered or shipped. When it comes to Amazon, they did launch a new subscription program for grocery at $9.99 a month on top of your annual membership Prime fee. But so clearly, Amazon is seeing some of the success that Walmart has had with that subscription model, and see that there is a convenience play to be had with consumers who are interested in that sort of service.
Are the folks who are using buy online, pick up in store, is it true that they're going in and actually buying more once they get to the store? Because that's a way that companies hope, that brick and mortar companies hope to get folks inside the store to buy more.
It does happen more often than you would think, because people are on their way to the store and they think, oh, I forgot to add this to my order. I'm just going to hop in and grab it. And when they're in the store, then that adds like two or three things by the time they get to the checkout. So it is something that actually really does happen. It's not with every order, but it's more often than most people would think.
All right, sounds really rosy. And it, they also saw traffic and unit increases that helped out sales growth, grocery business fueling the growth over at Walmart. Yet they did cut workers, right? They are very cognizant of higher costs generally, I guess, across their world as well as kind of everybody's world. So any commentary or color around that?
Yeah, sure. Walmart is very much an everyday low-cost provider as well as an everyday low-price provider. And part of that is really being disciplined with regards to costs. Now, we saw announcements in the last month about things like closing down the health clinics. We saw the announcements about corporate job cuts. Those are, in fact, likely related to a certain degree. But Walmart is, one of the things they do is they're not afraid to try something, but if it doesn't pan out, they pull back and they reassess. And so some of those cuts that we saw are really a reflection of that attitude towards their business.
Hey, if there's one business that you think that we should be kind of keeping on our radar, that maybe Walmart's going to be moving into aggressively, that could move the needle top and bottom line, just 20 seconds left, what would it be? I thought I heard you say fintech on TV earlier, but I don't know if that's it.
If we look to what Walmart's doing in their international segment with fintech, there's a lot to be excited about. And so whatever they can adapt and bring more into the U.S. and what they're trying to do with fintech here could be a catalyst.
All right, interesting stuff as always. Hey, Jen, thank you so much. Bloomberg Intelligence Senior Retail Staples and Packaged Food Analyst, our own Jen Bartashis, with really the rundown on everything to do with Walmart today. Walmart rallying, so too is the stock of Chubb.
Yeah, up more than 4% as we speak. We mentioned it late yesterday, the stock popping after hours. This as Warren Buffett's Berkshire Hathaway unveiled a $6.7 billion stake in the insurer, ending months of suspense over its mystery position in a financial firm previously concealed in regulatory filings. We did get this yesterday, Berkshire disclosing it in a filing, reflecting its positions at the end of the first quarter. Of course, Carol Buffett and Berkshire deeply familiar when it comes to the insurance industry.
All right, let's get more on it. The positioning, Chubb specifically, the Buffett, the Berkshire universe in insurance. With us is Bloomberg Intelligence Property and Casualty Insurance Senior Analyst Matthew Palazzola. He is here in studio. All right. Shouldn't be surprised. What's significant, or should we be surprised about this?
I mean, look, I was a little surprised. So we knew it was a financial company, and there were only a certain amount of financial companies big enough that they could have took a position in that they would have held confidential. So it was floating out there. I mean, they're businesses. They're both obviously big insurance businesses.
Yeah.
When you dig into it a little bit deeper, though, the Berkshire insurance businesses are personal auto is huge for them, not that big for Chubb. Reinsurance very big for Berkshire, also not that big for Chubb. So kind of complementary businesses. When I heard it, the first thing that came to my mind was the Charlie Munger quote: "Better to own a great company at a fair price rather than a fair company at a great price." Not to comment on the valuation of Chubb, but that's really what stuck out to me. Chubb's really the cream of the crop in terms of global insurance companies.
Why is that?
So their margins are a lot better, their underwriting margins. The CEO is Evan Greenberg. He's the son of Hank Greenberg, who's a titan of the industry, CEO of AIG. He's, in my opinion, the best CEO in the industry, right? He, to the size of this company and the global scale of this company, he knows things down to the business line and runs it kind of, with an iron fist, I would say. So their underwriting margins are better. They're huge, and they still grow a lot more than other companies.
Do you think this purchase, like Greenberg would have known about this purchase, or would this come as a surprise to him too?
You know, I don't know, Tim. I think I would assume they probably talk a little bit. I mean, like the first thing that came to my mind was Berkshire's got $188 billion in cash. They're trying to hunt for one last elephant. If there was anything to do like that, obviously it would have to be a lot of conversation.
So, we've done stories, Matt, about insurance, the insurance industry, and concerns, and places where people are either paying a lot or insurance companies don't even want to insure related to climate change.
I mean, I know folks in California who this week were told that their insurance was being dropped.
Yeah. And so it feels like there's some strains and stresses in certain parts of the insurance industry. Does any of this give that exposure to Berkshire Hathaway?
Not really, Carol. So Berkshire, Ajit Jain, who's the head of the insurance operations at Berkshire, right, another titan of the industry, made a great point at the annual meeting, which we kind of know, but it was really good to hear.
And you were there, by the way.
I was there, on the floor. He had said, look, climate change is a risk. It's happening, right? And Tim, you mentioned these companies pulling out of California. That's happening. That's, I think, only going to get worse, to be honest. But the great part about our insurance business, the insurance business, is we can reprice on an annual basis. So we know what's happening. We're not really locked in long term. Some personal contracts are 6 months. So they kind of have these opportunities to either exit lines of business or reprice. Not to say it's not a risk, but the industry's adapting to it.
Again, reminding everyone, you're talking about this from the perspective of an insurance company, not the customer of an insurance company.
Correct.
Which you likely are, because we all are customers of insurance companies. But I think it's fair to say that a lot of customers are feeling the pain of this repricing every 6 months for auto, for example, when they get these pretty shocking bills that show that, okay, wait a second, there is pricing power here because I really have no other choice. Everything's getting expensive.
Yeah, I mean, and look, P&C insurance is a product that's sold, not bought, right? It's bought, not sold, sorry. You have to buy it, right? You need it. Auto, and people have been feeling that across the country. Home, I think, it's been across the country as well, but there's more in pain points in like California, Florida. I think on the auto side, auto insurance companies love to compete away excess profits.
Yeah.
The problem was there weren't any profits recently. So I think what's going to happen maybe a little bit later in the year is you're probably going to see some relief on the auto side, maybe not so much on the home. But to your question, Carol, this is
different.
It's different. Chubb does high-end homes, and that business hasn't necessarily been great for them, but it's not any kind of risk for Berkshire.
I do also wonder, one of the things coming off of Milken, and I feel like Bloomberg has done some great reporting over the last month or so of just is the private credit world kind of getting access to some of the insurance companies, their excess cash that's on hand, that they have lots of cash. And I just wonder, is that part of the play? Is that part of the returns potentially for Berkshire, or is that kind of a little bit not something that, a little bit more risk than that they would maybe play into?
I would say probably not for Berkshire. I mean, the interesting thing, right, is Berkshire takes insurance float and invests it aggressively.
On their own.
On their own. And that's unique. And other companies that have tried to do that have failed miserably, right? And whether it's trying to do it through a hedge fund or in any other way.
So do you assume, or are you thinking at all, that you mentioned the big cash pile? All right, so Chubb's got about $106 billion, $107 billion market cap. I mean, does eventually Berkshire want to buy it all out, or does it really need to?
I don't know. So we were saying Buffett looking for this elephant-sized acquisition. The thing there is, we talked about CEO Evan Greenberg of Chubb. I can't imagine him working for anyone, right, necessarily. He took Ace and Chubb, put them together, two huge companies, and that actually went rather smoothly.
Yeah.
Perhaps if you were to say to him, hey, you can take over once Ajit Jain kind of steps down, you could take over this behemoth of an insurance, monster. I could see that being attractive, but Berkshire's not one to bid up. They're also not one to go hostile.
Yeah.
And Chubb's not one to say, okay, let's just take a one-and-done price. So I think there'll be some friction.
Should we look in recent years to what Berkshire Hathaway did with Occidental, sort of buying more and more of the company over a few months and coming out and saying, okay, we're not going to buy the entire company, but there's a chance that they could buy more than, 6.4% of the company?
Yeah, I think they could own more. Again, they have so much cash, they don't know what to do with it. They said they weren't going to buy Occidental. I would assume Chubb may even come out and say something like, look, we're not going to be acquired. But I could see them stepping up the ownership in it.
All right, 20 seconds since we're at the meeting. Is there something else you think that might be floating around for Buffett and Berkshire to put some more money to?
I don't know if they're going to do anything massive. They talked about a Canadian opportunity they were looking at, and I hadn't really seen much more than that. I think the loss of Charlie Munger kind of puts a damper on big moves, to be honest. But who knows? You never know. I don't want to, say it.
Some time. Yeah, exactly. Good stuff. Interesting. As we said, shares of Chubb up more than 4%. I think they're hitting an all-time high in today's session. So quite a move here. Bloomberg Intelligence Property and Casualty Insurance Senior Analyst Matthew Palazzola joining us here in studio. All right, still to come, we are still waiting for healthcare's great DNA revolution for the DNA testing company 23andMe. That's a big problem.
South Africa's most important election since the end of apartheid focuses on infrastructure challenges, economic growth, and political fragmentation. Bloomberg's Jennifer Zabasaja reports live from key battlegrounds in Johannesburg, Cape Town, and Durban.
We think that South Africa is an exciting part of the world.
South Africa is a thriving and vibrant democracy.
There's a lot of expectation for the election.
Coverage begins May 27th on Bloomberg Television. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
I had a big insight one day that women don't invest as much as men do. That, you know, we all think it's because they're risk averse, but maybe it was because nobody built anything for them.
Morning from our world headquarters in New York, I'm Manus Krennic.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything. The names that move markets are on Bloomberg.
It is President Biden's top priority to bring down the cost of living.
The United States' ability to spend without constraint is not unlimited.
We're in a very unusual time, and so the adjustments are taking place, and it's running through the economy.
We do need more innovation, more investment, single market and capital market union, and a relevant trade policy.
Bloomberg. Context changes everything.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Those earlier gains for the U.S. stock market, they are gone, evaporated, disappeared. Right now we have got the S&P lower, down 2 points, 53.06. Dow Industrials negative just a couple of minutes ago. Right now holding on to a 6-point gain of less than 0.1%. This on a day when we saw the Dow advance through 40,000. Right now we have got the NASDAQ Composite Index down 16, a drop there of 0.1%. 10-year, 4.37% with a 2-year yielding 4.78%. Spot gold lower by 0.3%, 23.78 the ounce. And West Texas Intermediate crude up 0.7 now, 79.17 a barrel. Bottom line, stocks are hovering close to a record. And again, that Dow Jones Industrial Average did top 40,000. Under Armour shares down 0.8%. Under Armour slumping after the sportswear maker gave a full-year outlook that did fall short of Wall Street expectations. Recapping, earlier gains have evaporated. S&P right now down 1 point, drop there of less than 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master, Tim Stenovic here on Bloomberg Business Week. Well, you may have done it or someone in your family. We're talking about DNA testing with a company like 23andMe or Ancestry.com. Interesting to find out more about, of course, where your family's ancestry composition is, right? We all talk about it. We find out, hey, did you know my family's done it? All right, well, the DNA testing industry was aiming for a bit more, to a world where the medical community added genetic testing to its standard operating procedures.
I don't know, Carol, maybe you find out stuff you don't necessarily want to know about your family or relatives. That's part of the story.
Hey, I've got a half-sister.
It's all part of the story.
No, I don't. At least I don't know yet.
After years and millions of spit kits, the doctors still don't care when it comes to this type of testing, at least for companies that are mass market. Mass market genetic screenings remain well apart from the medical mainstream. And for one of the players in the industry, 23andMe, it's actually never made a profit. Carol, it's the cover story of the new issue of Bloomberg Business Week. It's on newsstands, it's online on the Bloomberg. And here with us is Bloomberg News healthcare reporter Kristen V. Brown joining us in the studio.
Great story. So glad you could be here. DNA tests for everyone, lots of genetic data, and bam, research gets a boost and moves faster, and we create a roadmap for living to age 100. That's in your story. That was the plan.
That was the plan, yes.
And yet,
it did not
quite go according to plan, which I will say is often the case in science, right? We have a big finding, we're like, wow, we just have to do this like one or two things and then we'll solve all disease, which is almost literally what they thought would happen with the human genome. But then as we started untangling it, we realized, oh, this is just like way more complicated than we realized. And that turned out to be trouble for companies like 23andMe that wanted you to be able to just spit in a tube and learn, you know, all of the diseases you might be at risk for. But it turns out there's not just one gene for heart disease. There are so many genes we don't even know what they all are. It's
right?
so complicated, and they all interact, and we don't know how they interact. So they're trying to, for some of these things, do what's called a polygenic risk score and say, based on all of these genes, you might have a risk. But it winds up being more like you're slightly more elevated risk, not an actual roadmap for what do you do to stay healthy and live to 100.
And in a small portion of the folks who do the test, it does come back with some sort of result that says, okay, you do have the characteristics of this sort of genetic, you know, I don't even know the proper terminology.
Variant.
Genetic variant, thank you. But then treatment for that, as you note in your story, can be incredibly expensive.
Right. So monogenic diseases, there's a lot of them. That's genes, a single gene that causes a disease. There's a lot of them, but they're usually very, very rare. And because they're rare and the therapies are also very complicated, you know, fancy high-tech things, they're expensive. Small population, small market. So we have gotten a few of these therapies so far, but definitely not the, you know, therapies that we expected for very common diseases like Alzheimer's, like cancer. So we've gotten therapies that have a small market, and so therefore they're really, really pricey.
We talk about people spitting in a tube. I'm not going to ask for a show of hands in the control room or here, but you did.
I did it, yeah.
I did not do it.
I have spit in so many tubes in the course of my journalism career, but I did for this particular story too.
And it wasn't the typical 23andMe $20 thing, right?
This is a very high-tech
one.
test. Yeah, so 23andMe's latest offering is it's doing sequencing, not genotyping, which is a fancier. They're literally decoding every little bit of all of the protein coding regions of your genome, which are the ones that we think cause disease. And in doing that, they really hope to get this really holistic, nuanced picture of the genome. For me, in the sequencing, they actually didn't find anything. And then in the genotyping, which is a sort of more low-budget option, they found that I might be at risk for celiac disease, but I can tell you I had avocado toast this morning for breakfast.
Doing just fine.
It went fine.
Okay.
It went fine. So for me, at least, this is almost $1,000 test, and I learned that I might have a disease that I don't have. So I don't know.
Well, did you do anything about that? Like, I'm curious, did it cause you to say, well, maybe I'll have a doctor look into this?
Well, you know, usually if you have celiac disease, you have a violent reaction when you eat gluten. So I felt pretty confident. I also said I might one day develop glaucoma. I have a slightly increased risk, but you can't actually do anything about that. So I don't know what to do with that knowledge. So I felt like I should have spent that $1,000 on some shoes instead. Maybe, I don't know.
Preaching to the choir. Well, the medical community, right, has been, to some extent, they haven't embraced this idea.
No.
So, I mean, is that part of the problem? Is it just a case that it's complicated and maybe it is the right idea? Or, like, in your reporting, like, what's the kind of feedback on this?
So I started looking into, I wrote this story because I started wondering, you know, for the decade I've covered this topic, people have told me, you know, this is the year genetics is going to catch on. This is the year. This is finally the year. No, this year. And it just never happened. And so I started asking some of my longtime sources, you know, is this happening? You know, what's the status here, guys? And I was surprised to hear from many people who had been boosters for the genome, who were now saying, we're not sure it's ever going to happen.
That's amazing.
Yeah, and you know, with science, you never know. Maybe we'll turn a corner, we'll find something that will suddenly unlock everything. But based on what we know now, it does feel like it's just so complicated that for the average healthy person, there won't be value really in getting a genetic screen. Now, if you have a history of cancer in your family, if you want to become a parent and you want to make sure you don't have any genetic conditions lurking in your genome you could pass on, that stuff, all worth it. But if you're just an average healthy person, trying to live their best life, it just really seems like there's not going to be value in these tests.
It raises the question about what the future is for 23andMe, and that's a big part of your cover story for Bloomberg Business Week, the idea that the stock has been under pressure over the last few years, down more than 94% over that period of time. Richard Branson lost over $100 million on it going public. What is the future for 23andMe as a business?
Yeah, so I mean, they're in a real tough spot. They just got an extension to try and get their stock back up over $1. They have until, I believe, November to do that.
The concern is that they'll be delisted.
Yeah, the concern is that they will be delisted. And I think in a move to prevent that from happening, CEO Ann Wojcicki has filed an intent to take the company private herself, to buy it back, basically. So that could be one thing we see, but I think that it's a really rocky road ahead for them.
Well, it's interesting, and I don't know, is this a company that might benefit being private in terms of having the time, the luxury, maybe the money, to kind of figure this out?
Based on what the stock did when she filed that 8K, I would say that the market thinks it would benefit from going private. It's a hard company because it's part consumer, part drug development, and the investors in those two different kinds of companies, Anne has said this herself, they kind of have different expectations. So it's a weird blend of things, and that has created an additional challenge on top of having a consumer product that a lot of consumers maybe don't want anymore. So
what about the data?
NYMEX diesel June futures settle at $2.44 a gallon. NYMEX gasoline June futures settle at $2.53 a gallon. NYMEX WTI crude June futures settle at $79.23 a barrel.
Fast forward a few years, there's a big data breach.
NYMEX natural gas June futures settle at $2.49.
Privacy concerns has been one of the reasons kit sales have slowed. She said that in the past, and that could definitely be what's going on. One analyst joked to me that 23andMe would probably do better to just give the kit away for free in exchange for getting people's data, because that is the most valuable asset they have.
How much we've talked about generative AI, and you think about the more data that comes into the pool, whether or not that can help kind of be a turning point, like more information.
I mean, they have 15 million genomes. That is one of the biggest genetic databases on par with Ancestry and the country of China. So that's really valuable. And so if they can keep growing that asset, that could be big.
And to be clear, there was a data breach of people's personal information.
Yes, there was a data breach that had personal, and it did contain some genetic information.
All right, Elizabeth, our producer, YouTube producer, and me, we're both with your mom about this in terms of the information. Any questions that you still have? You've reported this story out and you're thinking about it. What questions are still kind of top of mind for you?
Yeah, I mean, I think for me, having covered this field for a decade, it was sort of an existential crisis to actually do this story and be, questioning whether this thing that I have covered for a decade really doesn't matter. So I think that I just want to see how this science unfolds and what value we will wind up getting from the genome. Because I don't think that it's going to wind up having been for naught that we sequenced the human genome 20 years ago. But I think what we're going to get isn't what we expected. So that's still to be written.
It's fascinating. I remember kind of early on in my career, like, they'd map something and we'd do a story. And then when they finally completed it, like, it was just like, wow, now we have all the information, what we can do with it. But here we are.
Here we are.
Here we are. More to come. That means more stories from you, more cover stories. Bloomberg News healthcare reporter Kristen V. Brown on this week's Bloomberg Business Week cover story, which you can get online on the Bloomberg and catch it also on the newsstand.
So you haven't done one of the tests yet?
I haven't. One of my brothers had.
Yeah, my sister did it.
But
I think, okay, if she did it, then
it's out there.
Yeah, we know.
People is definitely out there.
People can connect
Thanks,
the dots.
Kristen. Good to know.
All right, coming up, we've got the Wall Street CEO we all listen to big time, JP Morgan's Jamie Dimon, on the rallying inflation. Where is he concerned? That's coming up next.
Before that, though, we're checking the latest world and national news. We got Amy Morris in the Bloomberg 99.1 News in Washington, D.C. Hey, Amy.
Hi, Tim. The Justice Department has formally moved to reclassify marijuana as a less dangerous drug. It's a historic shift in generations of U.S. drug policy. The proposed rule recognizes the medical uses of cannabis. It does not legalize marijuana outright for recreational use. President Biden has asserted executive privilege over recordings of his interview with special counsel Robert Hur. House Judiciary Committee Chair Jim Jordan says he does not trust the written transcripts.
The recordings are necessary. The transcripts alone are not sufficient evidence.
Jordan's committee and the Oversight Committee were preparing to bring contempt of Congress charges against Attorney General Merrick Garland for declining to comply with a subpoena for the interview tapes. Prosecutor star witness in the hush money case against Donald Trump back in the hot seat today as defense lawyers try to trip away at Michael Cohen's crucial testimony implicating the former president. The court's going to be off tomorrow so Donald Trump can attend his son's high school graduation ceremony in Florida. And New Jersey Senator Bama Mendez's wife has breast cancer. She'll have to go through a mastectomy. That's why she was granted a trial delay in the federal corruption trial against the couple. They're charged with accepting cash, gold bars, and a Mercedes in exchange for political favors. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd have put everything I had into it.
I get asked more about our relationship than I do my wife. And you know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The Deal?
The Deal.
The Deal.
That deal.
The Deal.
Huge deal.
Who dug this up? What are y'all's in trouble?
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything.
The shape of the On athletic shoe is unique. It can't be mistaken for any other brand. The structure of On's C-suite is just as distinctive, starting at the top with a pair of CEOs.
What we realized very early on is if you're adding different capabilities to each other and you do that as equals, then this leads to better outcomes.
Mark Maurer joined On as Chief Operating Officer in March 2013. Martin Hoffman arrived as CFO that July. In 2021, they jointly assumed the CEO role.
We are a brand that needs to be excellent in designing product, in innovating product, but also in shipping millions of parcels from A to B in the most efficient way. So we need to have very different mindsets and very diverse people. Mark has different strengths, I have different strengths, and if you take us together, you just get more.
Companies with co-CEOs are rare, but On's configuration is even more unusual. Martin Hoffman also holds the CFO position. He says his two jobs complement each other.
I actually feel the CFO makes you a better CEO and the CEO makes you a better CFO. Understanding what you build as a CEO helps you to understand your numbers, and understanding the numbers helps you what are the right things to build.
Good morning.
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching The China Show.
This is Bloomberg Technology.
This is the countdown to the close.
Welcome to Balance of Power. This is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Yes, the Dow is higher, not above 40,000, 39,938. S&P will call that unchanged on the day right now. NASDAQ also giving up earlier gains. Right now, the NASDAQ Composite Index in the red. NASDAQ down by 11, a drop there of just about 0.1%. Bottom line here, we do have the Dow hovering near records as the Dow earlier crossed that 40,000 mark on bets that rate cuts will keep powering corporate America. 10-year, 4.37%. The 2-year, 4.79%. Spot gold down 0.3%, 23.78 the ounce. And West Texas Intermediate crude up 0.8%, 79.29 for a barrel of WTI. GameStop and AMC Entertainment slumping for a second day as the meme stock frenzy that gripped markets early this week fades. GameStop trading lower now by 25%. AMC Entertainment lower now by 12%. Recapping, S&P little changed, up now by 1 point. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet there. Well, a lot going on this week overseas. We've been covering it a lot here at Bloomberg, some great interviews. We've already highlighted the Choose France event, some great interviews coming out of that. We had the CEOs of Bank of America, the CEO of Goldman Sachs, of course, the French president, Emmanuel Macron. So much going on. We also had the Qatar Economic Forum where our own Eric Schatzker caught up with Ken Griffin of Citadel. So if you missed any of them, I highly recommend you head to Bloomberg.com or check it out on the Bloomberg terminal. But there is another event.
I was going to say, that's not all. That is not all. It's the JP Morgan Global Markets Conference in Paris. And as to be expected, Jamie Dimon, the CEO of JP Morgan, was there answering a wide range of questions when he spoke earlier with Bloomberg's Francine Lacroix, including weighing in on this week's record when it comes to stocks, and also whether equities were getting ahead of themselves.
I wouldn't call it turbulence. We've had good, healthy markets for quite a while. They're kind of predicting a soft landing, and you see that in both stock prices, which are kind of high, credit spreads, which are kind of low, markets which are kind of wide open. That's all good. It doesn't tell you what the future is going to be. I mean, I can point a lot of times in history where that was true, and the next year it wasn't true, and so. We'll see. I don't pay as much attention to monthly numbers as most people do.
I know. So what do you think the future is for inflation and interest rates? I'm a
little more worried about it. I mean, we've had very big fiscal deficits. And, I think the underlying inflation may not go away the way people expect it to. And I look at the future, like a lot of things we look at are kind of inflationary. The green economy, the remilitarization of the world, the infrastructure requirements, the restructuring of trade, fiscal deficits. So I think there are a lot of inflationary forces in front of us that, may keep it a little bit higher than people expect. So the surprise would be rates are higher, inflation a little bit higher, and maybe that'll slow growth. And obviously geopolitics is a whole different issue. That can be determinative in what our economy does next year, and we're just not going to know.
But so does that mean you think it's 50-50 whether the Fed cuts or hikes next time around?
Yeah,
the next move?
I really don't pay that much attention to that. The Fed will have to follow the data, and I don't know what the data is going to say, but I think they are doing the right thing to be patient right now. See what's going to happen. They may not know for a couple of months.
But no big correction. I mean, if you don't pay that much attention to it, it means you're not worried about anything.
No, I'm worried. I just said stocks are very high, and I think the chance of inflation staying high or rates going up are higher than other people think. So I think the chance, my view is whatever the world is pricing it for a soft landing, I think it's probably half that. I think the chance of something going wrong is higher than people think.
In the U.S. or globally?
Well, I'd say in the U.S., but also that could affect globally, yeah.
And Brent crude futures settle at $83.27 a barrel. That's up 52 cents or 0.63%.
A lot of happy talk.
Where does that happy talk come from?
Low rates, central banks are going to reduce rates. You know, maybe the geopolitical things disseminate, don't cause problems, and so you know, the future isn't predictable like that. So I'm a student of history. I've watched all the inflection points. If you go back, and my dad was a stockbroker, I go back to the booming markets of '72 and the collapse of '74, the healthy markets of '80, the collapse of '82. You know, the '87 market crash, the 1990 real estate crash, and almost all of them were not predicted the year before. So I look at these factors that drive these things. They're not always known. As a company, we prepare for all of it so we can serve all our clients regardless. But
what do you see as the main stress right now? Because if it's geopolitics, we talk about it. It's just not really priced in. Is it distress? Is it something actually going under that you worry about, or just multiple factors coming in at the same time?
No, I think geopolitics could create the main stress that we're worried about in terms of oil and gas prices, trade alliances. But I think the surprise would be higher rates because inflation didn't go down. That inflation's been stubborn, maybe bounces up next year. I think inflation next year may be in the cards. It may have nothing to do with what you're seeing today. So that to me is the surprise. If you had higher rates and God forbid stagflation, yeah, you'll see stress in real estate and leveraged companies and some private credit and things like that.
All right, feels like some sobering comments. That, of course, is JP Morgan Chase Chairman and CEO Jamie Dimon talking with Bloomberg's Francine Lacroix at the JP Morgan Global Markets Conference in Paris, right? It felt a little bit more subdued.
Yeah, he mentioned previous crashes and reminded everybody that, hey, we didn't see these things coming. They were not predicted the year before by any means. And also, I think the idea, and this is something that we talked a little bit about yesterday, actually, with Beyond the Bell, the idea of stocks being higher and that indicating some sort of looseness when it comes to financial conditions, which is really not what the Fed wants to see.
Right, exactly. And what's interesting, too, is I feel like everybody keeps reminding us there's a lot of liquidity still sloshing around in the market, right? We've had a lot of money financially from the government, certainly coming post-pandemic, a lot of stimulus, and then even post-pandemic in terms of, you think of some of the bills that have come out of Congress through President Biden and some of his spending, semiconductor. That's more money coming into the economy, and that's chasing, and it can certainly create some inflationary activity.
He made these comments earlier in the day, a day that where we see the S&P 500, the NASDAQ.
You get a record.
Highs. He said stocks are very high. I think the chance of inflation staying high or rates going up are higher than people think. My view is whatever the world is pricing in for a soft landing, I think it's probably half of that. I think the chances of something going wrong are higher than people think.
Yeah, listen, just think about the last couple of years. You go back 2 years, we had the Russia-Ukraine war. Weren't anticipating that. I mean, obviously, probably if you were in the intelligence community, you had some ideas of what was coming, but nonetheless, certainly I think for investors, that caught us off guard. Over a year ago, concerns in the regional banking industry, the Middle East war, which continues to today. These are things that I don't think people necessarily had on their, worry list, if you will, and here we are.
COVID-19 happening, in the early parts of 2020, a little more than 4 years ago. That was a shock that many people did not see coming.
Hey, one of the things I do want to highlight, too, that he talked about, he mentioned that geopolitics could create the main stress that we're worried about amid the impact that those dynamics have on oil and gas prices, trade and alliances. When it comes to China, he said the right thing for America is to, quote, fully and deeply engage. Still, that fragile relationship between the two countries makes banking in the country, where Dimon said JP Morgan has roughly 1,500 multinational clients, a riskier prospect. He said they're not leaving China. He said we're going to serve our clients there. We're just much more cognizant the risk is higher. He said you look at China from a risk-reward basis, it used to be very good. It's not so great anymore.
We should also note that his comments come at a time when JP Morgan has been boosting headcount. They've been boosting compensation. Many banks have been cutting back at this point. We're seeing 6th year of record revenue for the firm. Recent months, though, showing some signs of pressure. Net interest income ended a streak of 7 record quarters. Diamond did blame deposit margin compression and lower deposit balances in the consumer business for that sequential decline.
It's a much more balanced perspective, and it's like one of the things that we all felt like coming off of Milken, that there was a lot of enthusiasm, although I felt like underneath it there was a baseline of cautiousness or concern of whether it's geopolitics, things coming at us from not, from a place that we're kind of don't have on our radar. And I feel like this is what Jamie's saying. Remember we talked about that he's setting up, what was it, for a rate environment from, 2 to 8%?
Yeah,
quite a
they're
swing.
planning for, the contingency plan. I love
and you
when
probably have to do that as a bank. You have to have plans for whatever the environment is.
A lot of happy talk is what he said, is the reason why markets seem to shrug off his concerns.
Irrational exuberance?
Happy talk, Carol.
Happy talk.
Happy talk.
Well, it's interesting. On a day when we continue to look at the markets, went above 40,000 on the Dow Jones Industrial Average, S&P 500, 5310. So we've gone above 5,300. We know we're looking at maybe another, 24th record on the S&P this year. And the momentum continues. And we've got the NASDAQ just up a little bit. Nonetheless, very interesting. All right, if you missed any of that conversation, head to Bloomberg.com or check it out on the Bloomberg. This is radio.
Do you feel like this age of abundance over the last few years of just how much was being made?
For my personal taste, I am thrilled at what I get to find every night if I have time to look for something. So I personally don't think too much was made. I think the customer will tell us when there's too much made and they won't watch things. And I think part of the misalignment I talked about before is imagine if things didn't get picked up or movies didn't get made that people didn't watch or go to see. That's how it used to be. The customer decided. I do think there's going to be less made in the middle price range. I think there's going to be more made in the higher price range because when you get to global events like Barbie or Oppenheimer or Super Mario Brothers, it's worth the investment, and it's clear that the audience is there, and they just need to be given what they want. The middle, which ends up, quickly on one of the services in a way that we're watching movies that we don't know how they got made or when they got made and all of that. I think that will probably be curated better, and I hope there's more inexpensive things that give more people the chance to express themselves and have their work seen.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. Now, your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pella. Tractor maker Deere has reduced its profit outlook for the year as declining agriculture income pressures the world's biggest farm machinery maker. The cut comes as farm income has been easing, along with grain prices, giving growers less money to buy Deere's iconic green and yellow machines that plant, plow, spray, and harvest crops. Right now, we've got Deere shares. They are running lower, down now by 4.5%. Sources tell Bloomberg UBS is discussing plans to elevate investment bank chief Rob Karofsky to lead its entire U.S. business as the Swiss lender focuses on expanding in the world's largest wealth market. The shakeup, the details of which have not yet been finalized, would see the 57-year-old Karofsky take responsibility for the key wealth management business in the country. Shares of UBS down now by 1.5%. Schwab says Chief Financial Officer Peter Crawford is leaving the company after 22 years with the firm. He'll be replaced by Mike Verdecci from Citigroup. Schwab shares trading lower now by 0.4%. Under Armour stock slumping after the sportswear maker gave a full-year outlook that did fall short of Wall Street's expectations. The company is going through a transitional period as founder Kevin Plank, who stepped down from the CEO position in 2019 amid a series of scandals, retook the role in April. Shares of Under Armour down right now by just about 1%. Meta Platforms under investigation by the EU over concerns its algorithms are illegally exploiting the weakness of children to get them addicted to Facebook and Instagram. And those are our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
It is Bloomberg Business Week. Let's get a check on the latest world and national news. We got Amy Morris in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Amy.
Hi, Tim. It is a history-making shift in U.S. drug policy. The Justice Department has formally moved to reclassify marijuana as a less dangerous drug. It's a new rule that recognizes medical uses of cannabis and now acknowledges it has less potential for abuse than some of the more dangerous drugs. And President Biden calls this a major move.
Today, my administration took a major step to reclassify marijuana from a Schedule I drug to a Schedule III drug. It's an important move toward reversing long-standing inequities.
The plan would not make marijuana legal for recreational use. President Biden is claiming executive privilege over recordings of his interview with special counsel Robert Hur at the center of a Republican effort to hold Attorney General Merrick Garland in contempt of Congress. House Judiciary Committee Chair Jim Jordan says he doesn't trust those written transcripts.
The department's refusal to produce the audio recordings of special counsel Hur's interviews with President Biden amounts to a demand that the committee trust that the department created and produced interview transcripts are actually accurate and complete.
Jordan's committee and the Oversight Committee are preparing to bring contempt of Congress charges against Attorney General Garland for declining to comply with a subpoena for those interview tapes. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and now back to Bloomberg Business Week with Carol Masser and Tim Stenevec.
All right, Amy, thank you so much. I don't know if Amy's had this problem or Charlie's had this problem.
You got to go to Europe, I think, to have this problem.
I guess you do.
Yeah, so maybe Charlie travels a lot.
Yeah, I'll have to check in. Coca-Cola's new sustainable bottle caps are smacking into a sensitive area, apparently soda drinkers' faces. This is a story reported out by the Wall Street Journal.
It's a great one. Okay, so a couple years ago, Coca-Cola introduced a design that connected some of its plastic bottles to their caps. It was a test in Germany and Spain. It was then expanded to other European markets, according to the Wall Street Journal. The idea here is to get the cap to be recycled with the plastic bottle. In the end, it would lead to less waste and fewer bottle caps being thrown away and fewer bottle caps on the ground. But there's an issue here.
Well, you think about it, right? Like you open up the cap and you toss the cap or something, right? And so you worry about it being not connected.
Right, but you just leave it on or recycle it.
Well,
I don't know.
Listen, it complies with
Don't throw it on the ground.
A European Union directive set to take effect this summer, which has pushed Coke's rivals to follow suit. EU officials may be pretty happy, but soda drinkers apparently another story. Again, this is from the Wall Street Journal. Connected bottle caps hit and stretch their noses, cheeks, and lips as they drink and can be more difficult to close completely, some consumers say. If you go on TikTok, which I played around a little bit, I know you were checking out online too, like you'll see some videos of people like complaining about it. I was looking for the videos of people kind of getting smacked by it, couldn't find it.
I want to describe it for what it looks like, because if you haven't been to Europe or tried out these plastic bottles, it's not like they're attached by some sort of string here. It's almost like you twist the bottle off and it's still connected via one of the little plastic sort of divot things that it doesn't get completely pulled off. So I can see the way that if somebody pulls the drink up and it gets hit in the face, that could happen. However, Carol, it
shows... Is
this
really a tragedy?
It's not a tragedy,
okay.
But it does show the challenge of, as the article in the Wall Street Journal points out, of marketers, consumers, and then sustainability. Like when you get all those things together, it's kind of hard to design for those three things.
Coca-Cola, according to the Journal, says it would continue to assess whether to take its tethered bottle design to markets outside Europe, as well as look into new packaging designs. In the article, it's quoted, if we found an even better way to do that without compromising the current user experience, we would look into it. So they're on it, folks. Again, one more thing. That's a story from the Wall Street Journal. Hey, if you're watching on television, the close is coming up next. Tim and I, though, we've got the head of AI at Qualcomm. And speaking of AI, an exclusive interview with Salesforce CEO Mark Benioff.
Up next, it's the close and Bloomberg Business Week.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question. Best question I get all night.
Bloomberg. Top experts. Great questions.
If you like big round numbers, well, the Dow Industrials, they just gave you a reason to celebrate. Live from Studio 2 here at Bloomberg headquarters in New York, I'm Romaine Bostic.
And I'm Alex Steele. Do you like round numbers?
I do. Not 40,000. I kind of prefer 50, 100, you know. So, I don't know, wake me 10,000 points for me.
All right, fair enough. I mean, let's be honest. A lot of people are going to be like, yeah, Dow, whatever, no one cares. But I do. The S&P 500 is, again, at a record high. We're obviously off the highs of the session. But for the NASDAQ and the Dow, still sitting at a record. What I found interesting about what was moving the Dow to that 40,000 was the stocks within it. One was Walmart, obviously, earnings really good. Those high-end consumers actually going to Walmart. But the other was 3M. That's an industrial company. Vertical Research upgraded the stock, saying that they're very positive on margins and growth under the new CEO. I just think that that's really interesting. Consumer discretionary and industrials. And then just our random check-in here on the bond market. 2-year yield up 6 basis points remain. The equity market unfazed by that higher bump.
Yeah, despite, of course, the 40,000 level here, yesterday's rally to those record highs, at least kind of on pause today. You saw that on the screen there, pretty much unchanged. Some modicum of profit taking from yesterday and some digesting as well of the latest economic data. We did have numbers out today for new U.S. home construction, and it did show growth in April. Less than forecast, and permits to build new single-family homes, that actually showed a drop for a third straight month, down to the lowest levels that we've seen going back to August. This after it was trending higher at the end of last year. The home building index, at least as measured by the S&P 1500 index, down as much as 2% here on the day, with all 16 members trading lower, and that includes installed building products, D.R. Horton, as well as Toll Brothers among the hardest hits. In addition to the housing data, there was also that report on April import prices for the U.S., which continued to rise, including for core consumer goods, despite evidence of core goods disinflation in that April CPI print from yesterday. So what does that all mean? Well, while import prices tend to be volatile and don't always translate directly into CPI and PCE, the numbers really didn't offer much encouragement that inflation is still on a downward trajectory. Cleveland Fed President Loretta Mester said as much today without directly referencing the numbers, as did Richmond Fed President Tom Barkin. So what's the fulcrum point then? Maybe it is wages that are proving to be the difference between a temporary rise in inflation and one that gets firmly embedded and knocks a disinflationary trend off course. There's a new study out by former Fed Chair Ben Bernanke and former IMF Chief Economist Olivier Blanchard that makes the case that central bankers still need labor markets to cool if they're going to traverse that last mile of the inflation battle back down to 2%. Bernanke and Blanchard saying that as the shocks to other prices like food and airfare have finally started to reverse, the wage pressures for hot labor markets have become a more important source of inflation, Alex.
And that's been the fear the whole time, right? That wage data will spiral out and you'll get that wage price spiral. For the equity market, though, my question is, when do we sell stocks? And do we ever at this point sell stocks? And this is one case for holding on to those stock gains. So this is the EA function on the terminal. I would definitely suggest you check it out. And this is a historical analysis of growth. This is average sales percentage growth, and this is average earnings percentage growth. Here is where we are, right? First quarter of 2024. And just look at the improvement that we're expecting on an earnings level, and even more importantly, on a sales level. Now looking for over 5% sales growth in the next year, in the first quarter of 2025. With this kind of bar here, Romaine, why would stocks ever go down? Legit question.
Yeah, legit question, and maybe we can pose that to our first guest here to kick us off to the close. Is Mimi Duff, Managing Director over at Gen Trust. And we should point out, Mimi, and correct me if I'm wrong, but you've been overweight fixed income, underweight equities. Is that still the case?
Yep, we took, you got to take the overweight from somewhere, so we have shifted to underweight in the equity side.
Are you still comfortable with that, given some of the moves that we've seen in the equity space recently?
Yeah, well, I mean, we still have healthy allocations to equities. We're not missing this rally. We do feel that the overweight and fixed income will perform better in a range of outcomes if the economy does trip, or frankly, if we just continue to steady ahead, as we have seen. We think you're going to earn those yields on the fixed income side.
What would be the case to buy equities? Like, what would be the case? What would you have to see to kind of change that view?
Yeah, so earnings beat, right?
Yeah.
So if we continue to see reason to see further beats, if we were to see some of the wage inflationary pressures coming down without deterioration in the rest of the economy, then I think that you can get comfortable of more of a soft landing. And I personally think that's what the markets were reading into with the last payroll print. It did very much look like a soft landing scenario, and we did see some improvements on the wage inflation side there too.
So does that mean that you don't see a soft landing, or you just feel like, you know what, nobody knows, and either way, fixed income's going to do it for me?
The latter.
Okay.
Nobody knows.
Well, at least that's honest, right?
Yeah, you're probably the first person to say that. And
totally.
Actually, we appreciate that. But it gets to this idea, too. I mean, and obviously we know no one knows, but at the same time, people have to stay invested. They have to make those allocations here. I am curious, on the equity side of things, even though you are underweight, there's obviously something there that you feel is worthy of holding on to. Where and why?
Yeah, so within equities, we like broad markets. Obviously, the U.S. has been the leader, large cap, the tech, that's been the leader. So you really need to be owning allocations to that. We own diversified baskets. We also like infrastructure. That's been a winner for some time. We continue to hold that sector.
What about housing?
So housing is a bit tricky. You know, I think it's a bit more muddled because the current home stock, the homeowners are in very good shape, but if for new homeowners, rates are very high. We're starting to see some of the numbers look more mixed there. I think that will play out over time. How long are we going to be at these higher interest rates? You know, effective rates for home buyers are north of 7% right now.
Yeah. I like the idea, though, that if you look through the noise, kind of, how do you hedge all those bets? And that's why I wonder about what your AI call is, because that's going to be a structural change no matter what. And there's so many different ways to play it. There's the NVIDIA, there's also utilities, there's building data centers, there's all different kinds of stuff that's irrespective of what the Fed's going to do. How do you play that?
So on the alt side in our portfolios, we do have exposure to data centers. You mentioned that. I think you're getting, again, it's the S&P 500 has a lot of that, but it's not just the tech players, right? It's the second order effects of how does the AI wave filter through to all the other industries and improve efficiencies. So you really do have to have a very broad net when you're looking at AI exposure.
And
I'm sorry, go ahead.
I was saying, and then end up there. What about financials? So like, I feel like that strings all of the different, except maybe data centers, string it all together.
Yeah. So I think financials, an interesting picture, right? It's a story of winners and losers, right? Some of the biggest banks that, frankly, aren't even paying much interest on their deposits.
Oh yeah, I feel that.
Some of those names have done very well, but we're more concerned about the small and medium-sized bank where commercial real estate that's residing on those balance sheets, and I think it's going to play out again over time as those refinancings have to occur.
I mean, one potential, I guess, silver lining of all this is even if there is pain in the commercial real estate space, there are a lot of folks that look at it and they say that the elongated nature of this means that the contagion risk to other areas of the market and the economy might be more contained.
I think that's fair to say, certainly. I mean, the Fed is mostly concerned about consumer leverage, Main Street, not Wall Street. Yeah. And consumer leverage right now is just so much lower than it was, say, back in the financial crisis. So I think that's perfectly fair to say, especially if it takes place, if there's re-risking takes place over a long amount of time. Yeah. Maybe we can avoid having massive consequences to the full economy.
Absolutely here. And even though as some people try to look for some animal spirits in other pockets of the market, Mimi, always great conversation. Mimi Duff, Managing Director over at Gen Trust, here to help kick us off to the close. Coming up here, we're going to hear from our interview with Jamie Dimon. He says he's more worried about inflation than the markets appear to be. We're going to have some other highlights from that conversation in just a second.
Plus, a read-through on global growth and the status of the Baltimore Bridge cleanup with John Wobensmith. He's the CEO of dry bulk carrier Genco Shipping. And
Netflix's push into advertising, well, it's providing a big payday for those programmatic ad platforms. Trade Desk up for the second day in a row, as is Magnite. We're going to talk to get some sell-side perspective here on those two names in our top calls, all that and more. Coming up in just a second, right here on The Close on Bloomberg.
Politics to the world of business. 2 times a day at 1 p.m. and 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lyons deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world twice a day at 1 and 5 Eastern, only on Bloomberg TV and radio. Context changes everything.
This is Bloomberg.
Season is here.
This is a get out the popcorn moment.
And across the board, just pummeling of expectations.
Earnings matter. That's really clear.
Bloomberg is first to break the numbers.
Hey, folks, we've got Microsoft.
Apple earnings crossing the wire.
Alphabet, wow, coming in way above expectations.
Hertz driving in the opposite direction.
A lot still to come.
With the smartest insights.
Meta's kind of damned if they do and damned if they don't.
Is this their iPhone moment? I view this as Operation Kick the Can to August.
Continuing coverage on Bloomberg. Context changes everything.
Guess what? Jamie Dimon is still worried about inflation. The CEO of JP Morgan and the chair sat down with their own Francine Lacqua at the firm's Global Markets Conference in Paris, and he explained that despite the record highs we've seen for stocks, he still expects price pressures to influence the economy for longer than many investors are expecting.
I wouldn't call it turbulence. We've had good, healthy markets for quite a while. They're kind of predicting a soft landing, and you see that in both stock prices, which are kind of high, credit spreads, which are kind of low, markets which are kind of wide open. That's all good. It doesn't tell you what the future is going to be. I mean, I can point a lot of times in history where that was true, and the next year it wasn't true, and so we'll see. I don't pay as much attention to monthly numbers as most people do.
I know. So what do you think the future is for inflation and interest rates?
I'm a little more worried about it. I mean, we've had very big fiscal deficits. And, I think the underlying inflation may not go away the way people expect it to. And I look at the future, like a lot of things we look at are kind of inflationary. The green economy, the remilitarization of the world, the infrastructure requirements, the restructuring of trade, fiscal deficits. So I think there are a lot of inflationary forces in front of us that may keep it a little bit higher than people expect. So the surprise would be rates are higher, inflation a little bit higher, and maybe that'll slow growth. And obviously geopolitics is a whole different issue. That could be determinative in what our economy does next year, and we're just not going to know.
But so does that mean you think it's 50-50 whether the Fed cuts or hikes next time around?
Yeah,
the next move?
I really don't pay that much attention to that. The Fed will have to follow the data, and I don't know what the data is going to say, but I think they are doing the right thing to be patient right now. See what's going to happen. They may not know for a couple of months.
But no big correction. I mean, if you don't pay that much attention to it, it means you're not worried about anything.
No, I'm worried. I just said stocks are very high, and I think the chance of inflation staying high or rates going up are higher than other people think. So I think the chance, my view is whatever the world is pricing it for a soft landing, I think it's probably half that. I think the chance of something going wrong is higher than people think.
In the U.S. or globally?
Well, I'd say in the U.S., but also that could affect globally, yeah.
And so what does that mean for markets?
They'd be down. And credit spreads would gap out.
So why is the market not pricing that in?
A lot of happy talk.
Where does that happy talk come from?
Low rates, central banks are going to reduce rates. Maybe the geopolitical things disseminate, don't cause problems, and so the future isn't predictable like that. So I'm a student of history. I've watched all the inflection points. If you go back, my dad was a stockbroker. I go back to the booming markets of '72 and the collapse of '74. The healthy markets of '80, the collapse of '82. The '87 market crash, the 1990 real estate crash, and almost all of them were not predicted the year before. So I look at these factors that drive these things. They're not always known. As a company, we prepare for all of it so we can serve all our clients regardless. But
what do you see as the main stress right now? Because if it's geopolitics, we talk about it. It's just not really priced in. Is it distress? Is it something actually going under that you worry about, or just multiple factors coming in at the same time?
No, I think geopolitics could create the main stress that we're worried about in terms of oil and gas prices, trade alliances. But I think the surprise would be higher rates because inflation didn't go down. That inflation's been stubborn, maybe bounces up next year. I think inflation next year may be in the cards. It may have nothing to do with what you're seeing today. So that to me is the surprise. If you had higher rates and God forbid stagflation, you'll see stress in real estate and leveraged companies and some private credit and things like that.
All right, CEO at JP Morgan there, Jamie Dimon, speaking with our very own Francine Lacqua. And I thought it was interesting. I mean, we've heard these kind of comments from Dimon before, but I thought it was interesting he talked about, in his view at least, the disconnect between what he views as inflation risk and what the market apparently isn't viewing as a risk, or at least maybe they're just whistling past the graveyard.
Or that next year we could see inflation, like regardless of where equities are trading right now. And I feel like the elephant in the room in that conversation in some ways was fiscal. That we have so much money coming out of the government that kind of no matter what, that's going to float its way into the economy. And I wonder if that is also cause for inflation worries next year.
And that fiscal stuff is structural. I mean, he obviously mentioned fiscal specifically, but then you talk about, he referenced the Inflation Reduction Act, the spending on semiconductors and some of the tariffs and things like that, that of course are all, in theory, permanent and structural. And then you lay that over some of the more transitory things like wages and stuff. And I guess I could see why he would make a case for being concerned.
Which is why it's so interesting why we would have then cuts in that environment where you have growth and you have all that fiscal spend and then you get cuts. And I can see why people would scratch their heads.
And I think Jay Powell and folks are also scratching their heads as to why the market keeps pricing that in here. But of course, I mean, we still got a few months, a lot can change, and maybe the Fed will come around to the market, or maybe the market will have to come around to the Fed. In the meantime, we're going to focus on some of the big movers today. Netflix yesterday announced plans to launch an in-house advertising unit. The big beneficiaries of that might be the third-party operators. That includes Trade Desk and Magnite rallying once again here on the day. We're going to dive a little bit deeper into that when we come back after the break. This is The Close on Bloomberg.
The names that move markets are on Bloomberg.
How worried are you about the U.S. election? It's for the American people to decide what they want with their politics, with their government, with their future. But obviously, we are all concerned about it because the United States is the largest economy, the largest defense country in the world, and has been a beacon of democracy with all its upside and downside. We cannot interfere with their choice. It's their choice, and that's the beauty of democracy. But we have to be extremely attentive and anticipate, just as we do with inflation. You know, we do scenarios. What if, what if, what if? Then what do we do? Where I sit now in Frankfurt, head of the ECB, I think that we have to be strong as Europeans and not assume that we can rely on whoever our friends are around the world, because these things change over the course of time, as we have seen.
Bloomberg. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
All right, let's get a view from the sell side with our top calls. The big movers on the back of analyst recommendations. And we start off with Occidental Petroleum, a downgrade to hold over at Truist, which also trimmed the price target to 69 from 85. While the analyst is expecting the oil and gas company to have a solid second half, he also expects minimal shareholder return in the coming quarters. This after the acquisition of Crown Rock, while Oxy uses the majority of its free cash flow after that to reduce debt down to about $15 billion or less. The shares fractionally lower on the day. Next up, let's take a look at Wayfair. Argus Research lifting its recommendation on the e-commerce company to buy from hold home furnishing sales. They started off the year weak, but that shouldn't be a problem for Wayfair, according to the analyst. He expects Wayfair to benefit from growth in online orders and its active user base, given its broad selection of furniture and home goods. Nevertheless, Wayfair shares taking a leg lower, down about 3% on the day. And finally, an upgrade for pet insurer Trupanion. Bank of America raising its rating to buy on the hopes of material improvement in operating margins. He reminds investors that insurance is a cyclical industry, meaning a period of under-earning usually quickly translates into over-earning over the next 18 months. Those shares rallying 20% on the day, and those are some of our top calls. All right, we now want to turn to the world of entertainment and, more importantly, the world of digital advertising. Big news from Netflix yesterday with the streaming service announcing plans to launch its own online ad business, but it's going to need the help of some third-party advertisers like Magnet, like Trade Desk. Both of those stocks rallying for a second day. Magnet up more than 20%. Trade Desk having its best two-day run going back to February. This is a huge positive for Trade Desk, according to our next guest, and he joins us right now to talk a little bit more about this. Yugal Arunian joining us. He's Director of Research over at Citi. He's got a buy rating on Trade Desk shares. All right, let's talk a little bit about what this actually translates into in terms of revenue for Trade Desk. Have you mapped this out already, Yugal?
Hey, yeah, so we've mapped it out a little bit, and our expectations are that this can drive up to 400 to 500 basis points of incremental growth in 2025. So we're not going to get much of an impact this year. It's going to launch later this year at the end of the summer. Take some time to ramp up. But we think this can be about $500 million of billings for the Trade Desk in 2025. Now, the Trade Desk doesn't capture all of that, so those are ad dollars that are run through its platform, and then its average take rate on that is about 20%. So that's 300 to 400 basis points of incremental growth in 2025.
Yeah.
But Netflix is still really early in its advertising push, and Netflix ad dollars are going to continue to grow at a pretty rapid pace over the next couple of years as it scales that part of its business up. And so, that can contribute even more in 26, 27 and beyond.
Well, that's what I'm curious about when we talk about the evolution of connected TV and over-the-top TV and how it all sort of blends together, and how Trade Desk and some of these other companies are kind of at the center of that. You seem to be suggesting that we're still in the pretty early innings of this cycle here. So that would seem to suggest that growth rates, at least longer-term growth rates, could actually accelerate from where we're at right now?
Well, growth rates might not accelerate as total ad dollars get bigger. I think there are factors that can keep growth rates elevated for a long period, even as the size of the pool gets bigger. So, and if you look at the transition of viewership from linear TV to streaming TV, we're at about 50-50 now. And, linear TV, a lot of people would agree, is essentially broken more or less, and that pie is going to continue to decline. Ad dollars so far have trailed that. Right? Linear TV advertising is still about a $140 billion dollar pool globally. Streaming TV this year is going to be about $40 billion. And so we're not on a one-to-one basis there yet in terms of ad dollars, but we're there in terms of viewership. Viewership is going to continue to shift to streaming and CTV, and ad dollars we think are going to continue to catch up. And that's going to benefit the streaming industry, and is with the Trade Desk as a key kind of pipeline from advertiser dollars to the networks and the platforms. They're right there, centered really well to capture that opportunity.
Igal, who are the main competitors to Trade Desk, and sort of how might Trade Desk outmaneuver them, or maybe deficient in other areas in relationship?
Well, one of the things that we really like about the Trade Desk is that its position in the market, they are essentially unrivaled. So the biggest real competitors to what the Trade Desk is, which is a demand-side platform, that connects advertisers to the networks. And CTV is about 40% of Trade Desk's business today. The biggest competitors are those that are closed platforms, and that's Google DV360, and you saw Netflix announce that they're also going to be a partner here along with the Trade Desk. Amazon has a really big demand-side platform in video, but again, that's mostly focused on Amazon. We don't know the specific numbers for Google, but Google also is likely mostly focused on Google inventory and YouTube today. And the thing that differentiates the Trade Desk is that it's really open across the web. It's not within this walled garden. So, and it is truly independent. It doesn't own any of its inventory. And they are really unique in that world in terms of their size and scale.
Igal, thanks a lot. Super appreciate it. Thanks for jumping on. Igal Aronian over at Citi. Thank you very much. I wonder, if I buy an ad on linear TV versus, say, Netflix, I'm going to pay more for that ad, right, on linear TV. When does streaming sort of outpace that?
I think it's getting there. But that's what I'm curious about. I mean, I think some of it is it's so fragmented right now that you're not seeing the same, apples to apples numbers. But as you know, I mean, just based on your own viewing habits and everyone else's, I mean, it's just a matter of when, not if.
Yeah, you would think.
Yeah.
I mean, considering how much time I spend on Amazon or whatever. Okay, anyway, coming up, we're going to take you back to the supply chain issues that were caused by that Baltimore bridge collapse and see where we are now. John Wobin-Smith is president and CEO of Genco Shipping and Trading. He'll be joining us in studio to give us an in-depth look at the supply chain. This is The Close on Bloomberg.
The biggest risk in property and casualty, is that now climate change?
Yeah, so absolutely. When you look at natural catastrophes, the number of events has significantly increased, and not only the very big events like hurricanes, but also what we call secondary perils, so wildfires, floodings, and drought. And this leads to the fact that you have far more events and therefore a much higher cost of all of the natural catastrophes.
How do you really assess the risk of climate change? Because how can you possibly know whether there's going to be a hurricane or a flood is just based on the past or the projection of the future? Or how do you do that?
Since the dynamic has changed, we need to also look forward. And what we do a lot, we work a lot with scientists who understand what the warming of the Earth and climate change will mean for the question of taking risk. And secondly, we take much less risk than we used to take because we have to be careful.
So let's suppose there are a lot of hurricanes. Is that good for property and casualty insurers or not? Good because people say, well, there's going to be more hurricanes, I should buy more insurance, or not good because you got to pay a lot of claims?
It depends. I would say it's good because it creates the awareness to do more prevention. What we see today is that, as I said earlier, there is more events. It becomes more and more difficult to insure, and therefore we work a lot with our customers around preventions.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, Tuesdays, only on Bloomberg. Fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Just about 3:30 p.m. here in New York. This is the countdown to the close. I'm Romaine Bostick.
And I'm Alex Steele. And my question is, what stops the equity market? So what has the power to disrupt stuff? You were talking about wages.
Yeah, and well, wages, but then it's also, I guess, I don't know if you call them black swans, gray swans, but you have these potential disruptions that come down the pike every now and then, and that can prove to be inflationary. And we had that just a few weeks ago.
Yes.
Now, it may have subsided, but that is kind of the risk, right?
Yeah, exactly. And that's exactly where I was going to take it, was what happened in Baltimore at the Francis Scott Bridge when that collapsed, right? That had the risk of becoming inflationary and further disrupting supply chains. Luckily, it did not do that. And earlier this week, crews successfully used controlled explosives to break down parts of the bridge following that March collapse. Now, that temporary access channel has been set up with hopes of returning to full operations by the end of May, which, quite frankly, is amazing speed to get something like this done. So we wanted to get some insight on sort of the repercussions of that, where we are in the supply chains, how the inflationary environment is shaping up in that industry. And joining us for more is John Woban-Smith, President and CEO of Genco Shipping and Trading. John, good to see you.
Yeah.
Thanks for joining.
Yeah, thank you for having me.
Were you surprised it took just a couple months to start clearing the port?
Pleasantly, yes. Yeah. I mean, it's obviously an amazing feat, and I don't think anybody knew how long it was actually going to take. From what I understand, they're actually going to have the ship out from under it from 3 to 4 days from now, and actually alongside. And we had there was the first coal shipment that took place last week. And once the ship is out of the way, we expect early June, and we're already seeing June requests for shipping on the larger Capesize vessels for coal. And there's still a lot of coal on the ground. You have 1.5 million tons that's sitting there from backup that needs to be moved rather quickly.
It is really amazing though that didn't have like a longer term effect or kind of cloud over, I don't know, supply chains, inflation, etc. What are you noticing? You're a dry bulk shipper. Like, you ship things like steel, coal, like all that good stuff. What are you seeing in terms of, say, growth and inflation? Well,
Certainly there have been, well-publicized issues with the Panama Canal, and the low water levels. And then after that, obviously the issues in the Red Sea, which still persists today. And that is definitely inflationary, particularly with dry bulk commodities, because for the most part, most ships are now going around South Africa and avoiding the Suez Canal and the southern Red Sea in particular.
So if you're going all the way around the Cape of Good Hope or whatever, how much extra does that add to
12 to 15 days. And if you're actually avoiding the Panama Canal on top of that, you're talking about another 12 days. Though the Panama Canal is starting to ease up, the water levels are starting to get a little better, so there are a few more ships that are transiting.
So the price adjustments that we've seen to account for that here, do those prices stay, or when we start to see a normalization in shipping routes, both here in the U.S. as well as overseas, do they snap back?
Well, first of all, I don't think the Red Sea and avoiding the Red Sea, that's not going to go away anytime soon. I see that lasting for at least another 12 months. So yeah, I mean, well, look, it's obviously geopolitical and it depends what's happening there. But, you know, right now, I don't see why any ship owner would want to risk their crew putting them through that situation. So I see that lasting for a while. The Panama Canal, on the other hand, you know, we're now up to 27 vessels. The normal number that would go through there is 40. There still is an auction system, though, so you can't just show up and go through. You have to participate in the auction, which is anywhere from maybe $100,000 to $200,000 just to get in the queue. And so that is inflationary itself. We've had 2 voyages go through there over the last few weeks, going from west to east. So it's getting better, but not quite there yet.
Just randomly here, copper prices have surged recently on the short squeeze, and the ARB was really like go long Shanghai and short the U.S., and that ARB has really unwound, and now I've been reading a lot about a flurry of traders in China trying to get material into the U.S. to take advantage of those high prices. Are ships available? Like, is that doing anything for you?
Yeah, we're seeing a little bit coming off of the west coast of South America, and then again going up into the U.S. We've done a few of those shipments.
And is it really expensive to do that? Like, are prices high? Is the demand really there?
Well, again, you have to go through the canal, right? So you've got that extra cost no matter what in order to do that. But when you're looking at the price of the commodity, it probably makes sense.
I am curious about the demand side of this, and I was taking a look at container shipping rates, a little bit different than what you guys do, but I was seeing those prices were up significantly in the most recent week, another 10%. Now, some of that's good because it seems to suggest that economic activity is picking back up, at least for the goods that consumers buy. Are we seeing, or do you anticipate a pickup in economic activity for the types of goods that you're shipping, the dry bulk goods?
Yeah, so we're cautiously optimistic on Europe entering a recovery stage. I mean, their steel production has really, it's been negative. It's been the only negative steel production actually worldwide. India's been very strong. China continues to be strong, but Europe has lagged. And so we see that starting to normalize, hopefully by the end of the year going into next year.
Longer term, with all of the efforts at reshoring certain types of things and trying to find other sources of raw materials that aren't necessarily either coming from China or for some African nations. And I know that's a process that's going to take years, if not decades, to play out here. But how do you sort of, I guess, adjust for what could be, I guess, effectively changes in what gets shipped and where it gets shipped?
Yeah, so, you know, new trade routes, I would say, in dry bulk are relatively rare, but one of the big trade routes that has been now created is the bauxite trade out of West Africa. Most of that is going into China. And before, the only thing that was really happening in the Atlantic was iron ore out of Brazil going to China. So now you've got 150 million tons a year that's coming out of West Africa and going to China. So and that's a trade route that's really developed over the last few years. Baltimore, though, shipping coal out of off the east coast of the U.S., it's not a new trade, but it has grown. India has really started importing a lot, particularly the metallurgical coal for their steel industry, but also thermal coal. Some of that's coming out of Baltimore. Some of that is definitely coming out the east coast. So we've seen growth, not necessarily a new trade route, but those are the types of things that we contend with and try to set ourselves up for.
Before we let you go, if you were to rate China's growth right now, what would you rate it as?
In terms of GDP growth, or
like
in terms
from what you see, like is it an A, is it a B, is it a C? Like, what do you think?
So this is a complicated question in the sense that our view is the housing market still has big time problems, and that is certainly a consumer on the steel side. But we've seen steel exports, they're up 20-30% this year. Most of that's going to other areas in Asia. We see steel production as healthy. We don't see big growth rates coming in steel production, but we see it relatively flat to maybe up 1% to 2% over last year. That goes into the iron ore trade. The iron ore trade's been doing very well the first part of the year. Typically, it does even better in the second half of the year on the back of China. And I mentioned that bauxite trade. And India is going like gangbusters on imports right now for dry bulk.
All right, well, this has been very illuminating. You've been doing this for a lot of years, and I was just told, oh, no, I'll give him a compliment. That's the induction into the International Maritime Hall of Fame for your whole career and everything that you've done in that. So congratulations on that.
Thank you.
And John, great to have you here. John Woven-Smith, President and CEO of Genco Shipping and Trading. Alex.
All right, coming up, you got a look at Chinese tech names as shares of Alibaba, JD.com, and Baidu rise amid mixed earnings reactions. More on that in the stock of the hour coming up next. This is The Close on Bloomberg.
It's been 10 minutes time now at 3:50 p.m. Eastern Time. We expect comments from Fed's Bostic. Bostic is participating in a moderated conversation about the economic outlook in Jacksonville, Florida. And no text is expected, though there will be a Q&A, and no live stream is available for this event either.
24 hours a day. Bloomberg. Context changes everything. South Africa's most important election since the end of apartheid focuses on infrastructure challenges, economic growth, and political fragmentation. Bloomberg's Jennifer Zabasaja reports live from key battlegrounds in Johannesburg, Cape Town, and Durban.
We think that South Africa is an exciting part of the world.
South Africa is a thriving and vibrant democracy.
There's a lot of expectation for the election.
Coverage begins May 27th on Bloomberg Television. Context changes everything.
Good morning from our world headquarters in New York. I'm Menace Credit.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
I had a big insight one day that women don't invest as much as men do. That, you know, we all think it's because they're risk averse, but maybe it was because nobody built anything for them.
The Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
All right, it's time now for our stock of the hour, and it's a closer look at several stocks in the Chinese tech space here. Global investors, they have been cautiously returning to those Chinese stocks. We saw that in 13F filings from David Tepper. We saw that in 13F filings from Michael Burry, pushing the Hang Seng Tech Index up more than 24% just in the last 3.5 weeks alone. Abigail Doolittle joining us right now for a closer look at our stocks, plural, of the hour. Alibaba at the top of that list with a 7% gain, but this has kind of been unfolding for the last few weeks. A lot lot of people, they kind of abandoned that Chinese tech trade, but it looks like it's back.
It looks like it's back, and I would say it's actually a theme over the last couple of years because we have China stocks underperforming U.S. stocks over the last 4 years. And if we take a look at a chart of the two of them, the S&P 500 up 80%, the CSI 300 down. Now, there's been lots of starts and fits in there where investors have thought that China tech and China stocks were investable again, but it simply has not happened yet. But we have this flurry of big investors coming out basically saying that they think that there's going to be some activity here for these China stocks. Michael Burry, who is, of course, well noted for The Big Short and shorting the housing market in the GFC, he doubled his position, albeit small position, but he doubled his position in Alibaba, doubled down in JD.com. Apparently, they just put up a good quarter, Alibaba less so. But the big question, is the macro in China really changing enough to support this? And I would argue we don't know. Like one of my sources who goes to China for real estate issues, or he's a real estate investor, developer, he has been there over the last couple of months. He said it's so much worse than what the media is reporting. So it may not support the idea. They just don't seem to have gotten out of their own way since the pandemic. The recovery is not the same. And also what's really interesting to me is we now have President Biden putting additional tariffs on some Chinese goods recently, in addition to the former President Trump tariffs. I almost wonder if those initial tariffs, because they were pretty severe, if that's part of the reason why the Chinese stock market has not recovered. Because again, a chart, if you take a look, you know, the S&P 500 going sky high, China stocks just not. So, but is this the real deal? I would say we don't know yet.
Have we noticed technically, though, is there when do we get to maybe breakout potential?
So it's interesting. I was just taking a look at one of the charts on either the Hang Seng or the CSI, and it is starting to break that downtrend. So there is a possibility that this is the real deal. But from prior standpoints, it did that before. So, you know, it's not technically. I can see why investors from a technical standpoint, just purely technicals, would be somewhat interested. But here, if we take a look at this terminal chart, you can see all the false starts. Is this the real one? I don't think it's very convincing there yet that this is.
So in 5 minutes time now, we expect comments from Fed's Bostic. No text is expected and there's no live stream available, but there will be a Q&A.
Some of those technicals, I mean, you are seeing a little bit kind of above those longer term moving averages, above those Bollinger Bands. So I guess maybe that is momentum. But to your point too, I mean, of course, Bloomberg's written a lot about a lot of the issues still going on in the property market there, and China's still trying to get a handle on it.
Yeah.
All right, Abigail, thanks a lot. Really appreciate it. Bloomberg's Abigail Doolittle joining us. I guess the problem is if you're an investor and you want exposure to China, how do you do that? Because you can't do Apple now, right? That feels like a risky bet if you want China exposure.
I don't know. It's funny. I remember having this conversation, maybe it was like a couple years ago, and it was so many of these big investors said, look, you don't need to buy a Chinese stock to get Chinese exposure. I mean, you just go through some of the big companies, and maybe it's not an Apple, maybe that is vulnerable, but there are other companies out there that still have sizable Chinese exposure. In fact, in a lot of the consumer space as well. So,
it's true, and sometimes they have localized production, like a Caterpillar, so it makes it easier then to sell, so the trade tariffs are a little different. Anyway, really interesting conversation. Well, we will continue to count you down to the closing bells. Paul Christopher, head of investment strategy over at Wells Fargo Investment Institute, will be joining us. This is The Close on Bloomberg.
In global leadership are on Bloomberg.
The ultimate goal of doing away with the central bank still stands. The discussion regarding the central bank is primarily moral in nature. The way we see it, there has been a cultural change in Argentina. Today, wages are miserable, not through our own fault. That is due to 20 years of populism. Argentines have understood that populism is no solution, and that the quick fixes they sold to them during the last 100 years, both the criminal politicians and criminal economists, they were all false. And we need to opt for a pure orthodox market-based solution. And that's what's going to make us succeed. And that's what's underway. In fact, there are already indicators today that show that activity in the agriculture sector, in the oil and gas sector, in mining, well,
Shortly expecting
our
comments from
economy is
Fed's
recovering
Bostic.
strongly in those departments. There are indicators that point to the fact that Argentina could really make a strong comeback.
Nobody covers the top global leaders like Bloomberg Television and Radio. Context changes everything. The names that move markets are on Bloomberg.
It is President Biden's top priority to bring down the cost of living.
The United States' ability to spend without constraint is not unlimited.
We're in a very unusual time, and so the adjustments are taking place, and it's running through the economy.
We do need more innovation, more investment, single market and capital market union, and a relevant trade policy.
Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching The China Show. This is Bloomberg Technology.
This is the countdown to the close.
Welcome to Balance of Power.
This is Bloomberg.
So looking now to the market on close imbalance, that's 3.4 billion to the buy side.
This is the countdown to the close. Romaine Bostic alongside Alex Steele. With 10 minutes until we get to the closing bell, starting to see a little bit of a fade in the action here, Alex. Looked like we're setting up for new all-time highs here, but a big pullback in the S&P, the NASDAQ. The Dow just barely holding on to its gains.
I know. The Dow, I think, is going to close at a record, so we got one thing going for us there.
Sure, I got a 40,000 hat. I need 40,000.
Yeah, I understand.
Alex, not just a record.
I totally get it.
Otherwise, this hat was for nothing.
It just deteriorates. We threw confetti in radio when it first happened, which is very exciting. But again, I go back to kind of the dynamics of the Dow.
How did our bosses feel about that?
What?
How did our bosses feel about that?
I don't know. We got it on YouTube. You can check it out on YouTube. I just want to point out the Russell, though, underperforming yet again, down 0.6%. I say yet again because whenever we see a downdraft in the S&P, the Russell kind of follows. And, you know, if you're going to broaden out, let's see if the Russell can really hold up here. I'm thinking 40,000 tomorrow again. Is what I'm thinking.
Yeah, and we should point out, too, I mean, even though we are seeing red on the screen, when you look at some of the elevated levels, the near record highs that we're sitting, it raises a lot of questions about whether you reallocate. Do you underweight equities and move into something else? We had a chance to catch up with Mimi Duff just a little while ago over at Gentrust and asked her why they shifted to underweight equities.
We still have healthy allocations to equities. We're not missing this rally. We do feel that the overweight in fixed income will perform better in a range of outcomes if the economy does trip, or frankly, if we just continue to steady ahead, as we have seen. We think you're going to earn those yields on the fixed income side.
And that was Mimi Duff at Gentrust, who helped kick us off to the close just about an hour ago. And here to help take us to those closing bells is Paul Christopher, head of global investment strategy at the Wells Fargo Investment Institute. And Paul, I mean, we're still sitting at near record highs for all the major indices here in the U.S. Is there a case to be made for further gains? Is there a case to be made for being overweight?
Oh, absolutely, Romaine. We've been overweight in the S&P for a while, but we've been a little bit more selective in how we do that. But to the point of your question, yes, it does look, especially after yesterday's CPI report, it looks like the hotness is starting to come off just a little bit in CPI, and that's going to give the markets, I think, some more upside. What happens after that, though, is likely to be a little bit more chop. So we'll keep our defensive positioning for right now, but we're overweight the overall index.
When we talk about that defensive defensive positioning, Paul, what does that mean? Does that mean big cap tech? Does that mean like traditional defensive sectors like healthcare? What?
Yeah, no, good question. We do still like the S&P 500, but we're not going to chase IT here. We're not in information technology. We're not going to chase comm services. We're going to go for sectors that don't maybe have as much sensitivity to interest rates and have, therefore inflation as those two sectors do. So we like industrials, for instance. So we like materials. We like healthcare and energy. Kind of a mix there. But all four we think have good longer-term prospects and will benefit from the turn higher we think that the economy is going to have a little bit later this year and into 25. But we don't want to play the momentum trade.
Hey, Paul, you know, I'm looking at utilities. I love looking at utilities, funnily enough. Over the last few weeks, in May, it has been utilities the second best performing sector within the S&P aside from tech. Are utilities defensive for you? Are they a growth area? Do you like them?
Yeah, they've been defensive, but I kind of wonder to myself, we do broadly here at Wells, whether or not utilities are starting to get a little of that bid that we've seen going into industrials that relates to artificial intelligence. All these data centers need to be constructed. That's industrials, that's materials, and they're going to need enormous amounts of power. That means building out the electrical grid, and could be utilities are getting some of that bid right now.
Interesting. So in some ways it's defensive and growth in some kind of capacity. Do you think that what would wind up halting the equity rally? You said choppy. What would bring us materially lower at this point?
Oh, goodness. Any sort of black swans. I mean, we've already seen some escalation in the war in the Middle East. If that should escalate further, we think that would be a very obvious roadblock for the markets and send us lower. But I think more probably it's going to be something like inflation. You know, that inflation report yesterday, not as hot as previous, but still not out of the woods on that. If we were to get another surprise pop in inflation, let's say next month, the May report coming out the middle of next month, that could set markets back a little bit. And so that kind of chop, waiting for the Fed to cut rates, waiting for the economy to finally finish its slowdown and hit bottom, we don't think there's going to be a recession, but we are looking for more slowdown. So either one of those two factors and a delay in the Fed, those are probably the most likely sources for the chop that we see probably going into the summer.
There's been a lot of talk about the focus of the Fed on the real economy, if you will, Main Street, if you will, Paul. But there's been a lot of talk also about financial conditions. You have a lot of Fed members, including Jay Powell, saying, well, financial conditions appear to be tight or at least restrictive enough to do the job on inflation. But then you look at the market pricing and you look at market action, things seem a little bit loose. And I'm curious as to where you feel things are right now and whether that's going to be, I guess, an aid or a hindrance to what the Fed is trying to do.
Yeah, I wouldn't want to cross the Fed chairman, but with respect, the interest rate hikes that the Fed has delivered to us have hit certain segments of the economy that are more interest sensitive. So the consumer, the housing sector, manufacturing, parts of manufacturing suffering under scarce credit and expensive credit, especially small businesses. You've seen the Russell 2000 underperform here. But at the same time, there's quite a bit of liquidity in the economy still, both from the fiscal spending of last year and the year before, as well as Treasury and Fed programs last year to support the banks, injected about $500 billion into the economy. And now the Treasury more recently shifting to bills instead of notes and bonds. That's shifted some more liquidity into the economy coming out of the Fed's reverse repo facility and into markets. And so when you get that kind of liquidity, yeah, it can support markets. It'll support narrow credit spreads, higher stock prices, perhaps even some more money going into gold, a stronger dollar overall. And so we still see signs that liquidity will be a support, will be a buffer for the market. We're not looking for a deep correction. We just think there's going to be some chop and probably some buying opportunities for clients who are waiting for some of those pullbacks.
All right, Paul, going to have to leave it there. Great stuff as always. Paul Christopher, head of investment strategy at the Wells Fargo Investment Institute, helping us count you down to the closing bell. With just about 3 minutes to go, Alex, until we get to those bells. And I liked his last comment there about the idea of finding opportunity. And we've seen that a lot here. And we've heard that a lot from a lot of guests here that, yeah, maybe the broader markets maybe look a little choppy, but there's a lot of individual sectors and stocks that can be bought.
Yeah, and also choppy is not like a 5-10% downdraft either. No. Like, I find it really hard to create a scenario that's not a black swan, that where you see 10% down.
Yeah.
Like even the dip before tax season was bought.
Yeah, well, that's the other thing, too, because everyone's so obsessed about what the Fed does. But even if we just stay here, I mean, the market's shown that it could handle that, right?
Yes,
so
absolutely.
So why are you scared?
I'm
I mean,
not scared.
you. I mean,
oh.
in the royal sense.
We?
Yeah.
I don't know. That's a great question, because we're used to being nervous.
Yeah.
I don't know, but it does feel like, why wouldn't stocks just keep going up in some fashion? Like, yeah, it's choppy. Yeah, you got stuff, but why wouldn't you buy?
All right, well, right now looking at S&P down a fraction of a percent here on the day. Stick with us. We're going to take you to the bell and beyond.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Alex Steele. We're counting you down to the closing bell. You're here to help take us beyond the bell. It's a global simulcast. Scarlett Fu in the TV studio, Carol Masser and Tim Stenovic in the radio booth. Welcome to our audiences across all of our Bloomberg platforms. That includes our partnership with YouTube. Coming off those record highs yesterday, Carol Masser, and coming off a Dow 40,000. I know you were ready to pop the champagne. You always have champagne there at your desk. But it looks like we're not going to close at that level unless there's a big rally here in the next 2 minutes.
Listen, the first hours, the 2 o'clock hour, 3 o'clock hour, like, you get a record, you get a record, you get a record. Like, that's been our theme all day. But it definitely feels like we're running out of some momentum here. But it's been quite a week if we just step back. Happy talk. Isn't that what Jamie Dimon calls? He's a little worried about all of this.
I was surprised to hear his more subdued tone in that interview that he gave. Hey, one thing that I have my eye on because, well, meme stocks are still a thing. Are they? Is the air coming out of these meme stocks? Yeah, these aren't two of my decliners, but it's still worth noting that GameStop is down 30%, AMC is down another 15%. Yeah. Was it, blink and you missed the meme stock rally?
I'm kind of surprised it lasted for more than a day, as it was. I thought it would be one day and then game over. Interestingly, for a month in which, the adage is sell and may go away, for the S&P 500, you have every industry group higher except for energy stocks. They're in the red. And in the Russell 2000, you also have every industry group higher. Energy is a laggard there, but within the small cap space, they're up 2%, energy stocks.
And volume really picking up here also as we get into the close. A little heavy trading as we're moments away here.
Yeah, you're still seeing, though, a little bit of buying going on, selling going on in the Treasury space. The VIX subdued here on the day, down back around 12 here, and the dollar relatively unchanged on the day. As far as equities go here, we're not going to get to 40,000 on the Dow. In fact, the Dow flipping into the red here at the closing bell, 39,870. Takes a while for these numbers to settle, but not the 40,000 that we all had printed out our hats for. Down 0.1% on the day. The S&P down 0.2%. The NASDAQ composite down about 0.3%, and the Russell 2000 down 0.6% to close out the day.
All right, back to the S&P 500 overall. Kind of an even split, a little bit. 224 names gaining ground, you guys, on this Thursday. 276 to the downside, so a little bit more of a slightly risk-offer trade, I guess you could say, a little bit. 3 unchanged here, Scarlett, but kind of an even split.
Yeah, and with the swoon in the last few minutes of the trading day, you have a 10 out of 11 groups in the red. So let's just focus on the green spot right now. That is consumer staples, and that is Walmart primarily. In terms of laggards, consumer discretionary, materials, and industrials, each down by at least 2/3 of 1%.
All right, guys, let's get to some of the individual gainers, if we may. Walmart atop that list, number one gainer in the S&P 500. Wait, let me make sure because I thought it moved down to, number one gainer in the S&P 500, finishing just off its highs of the day, a 7% gain, surging, topping $500 billion in market cap for the first time. We know Street very impressed on their earnings, posting stronger than expected first quarter earnings, boosting its annual sales and profit forecast. And talking with our own Jen Bartosh, just talking about, who the Walmart consumer is, folks. It's people making less than 100, some making above 100, but also wealthier. It's kind of a third split, if you will, among those different groups. So it's interesting how the customer, she says, has really changed at Walmart. So really interesting company. Chubb also among the top gainers in the S&P 500, number two gainer, finishing off its highs, but still a 4.7% gain. We learned yesterday, we all did the headlines, Warren Buffett's Berkshire Hathaway now has a $6.7 billion stake in Chubb, ending months of suspense over what its mystery position in a financial firm it apparently had been previously kept concealed in regulatory filings. And I know we've got some earnings, so maybe we go there.
Yeah, we got Applied Materials coming out, so earnings per share for the second quarter coming in $2.09. That definitely did beat estimates. estimates. Also, net sales beating estimates, coming at $6.65 billion versus estimates. Its semiconductor systems net sales also pretty strong, $4.9 billion. I mean, this tracks, right? Strong chips.
Yeah, and it's interesting too when they kind of talk about sort of what's driving this here. I mean, I think it's a little bit more broad-based than what we saw from some of the other chip makers. So it's not just about AI and EVs, if you will. Here, they're still kind of pushing the whole Internet of Things, as well as clean energy as well.
Yeah, and they mentioned all of that in the press release. Applied Materials has the most enabling portfolio. That's interesting. I've never heard that term. For chips that underpin tectonic shifts in technology, including AI, Internet of Things. Are we still talking about that? Electric vehicles and clean energy.
I got to tell you guys,
that's funny.
I can't get my washing machine to connect to the internet.
Yeah, that's the Internet of Things.
It's not
You're
working.
missing out, Tim.
Why do we
need that? Why do we need that?
I don't know, but it's not working.
Agree.
I mean,
so I don't even know why we need it because I can't connect it.
Okay, well fix that because I'd like to know why I need that to happen.
I would like to know as well.
They can charge you more money for the, internet-connected washing machine.
Toothbrushes
it still washes clothes. That's what's important.
Why do we need an app to brush our teeth?
It still washes clothes. That's what's important. Hey, shares of AMAT higher by 0.4% right now. Second quarter adjusted EPS coming in above estimates at $2.09. Second quarter net sales coming in above estimates at $6.65 billion versus estimates of $6.52 billion.
All right. Can I just hit on yields for a second? Let me hit on yields for a second, guys, because it was a big move, and I think it's worth talking about. Is you look at the 2-year yields are up by
Fed's
about 7
Bostic says I'm pleased with inflation progress in April, but the Fed is not there yet.
Yesterday on that super solid buying, and now we're just back above those levels. So I think it's interesting that we're going to get sort of the range-bound yield momentum here. But higher yields, not a problem for the equity market.
And I was looking through Warp earlier because I was like, given all that's happened this week and over the last week and a half, that there must be a huge repricing in terms of Fed expectations, and you're really not seeing it. I mean, it's just kind of like you have some tweaks around the margins, but for the most part, everyone still is kind of in the same camp that they've been in now, at least for the last 3.5 weeks.
Hey, I know we're still waiting on some other earnings,
just
Take-Two
iterating
Interactive.
that the CPI number came in lower than the 3-month average of this year.
This Thursday afternoon. Not any meme stocks, but I do want to talk about John Deere because it is the world's biggest farm machinery maker. Shares fell 4.74%. The company did reduce its profit outlook for the year. Annual projections missed the average analyst estimates. Actually, declining agriculture income pressured the company, and lower grain prices have left its customers.
According to a poll, the Reserve Bank of New Zealand, 25 basis points cuts are seen at a 5.25% in Q4, the medium forecast.
In the after hours, they did close today lower by 2.7%. The company did.
So this poll also notes that the RBNZ is a hold rates at 5.5% on the May 22nd meeting, according to all 30 economists in the poll. So there's a no majority view on the timing of the first Reserve Bank of New Zealand cash rate cut.
The company said it's restructuring and it's going through a transition period as Kevin Plank, who stepped down from the CEO role back in 2019, came back last month.
I've lost track of how many restructurings they've had.
I know. Well, they gave a full year outlook that also fell short of Wall Street's estimates too. So it's not just the most recent quarter, but also this huge restructuring that they're undertaking.
All right,
Fed's Bostic says one data point is not a trend.
Guys, I just want to draw your attention to Take-Two Interactive. Man, it's getting slammed in the after hours. All has to do with its forecast. Coming out and seeing fiscal year 25 net bookings, 5.55 billion to 5.65 billion. The estimate was much above that, 6.92 billion on the street. So yeah, some disappointment. Stock right now, Scarlett, down about 9.3% here in the aftermarket.
Yeah, and it's really on that forecast. The net bookings coming in lighter than anticipated. First quarter net bookings 1.2 billion to 1.25 billion. Analysts were looking for 1.26 billion. For the full year net bookings, really coming in light. Also worth mentioning here that the fourth quarter numbers, the quarter that passed, includes a $2.18 billion goodwill impairment. I wonder if that is tied to Zynga and the purchase there and how that hasn't really played out for Take-Two. We already know that it said it's cutting 5% of jobs, it's streamlining titles, it's really embarking on this cost-cutting program as it, of course, still moves forward with the release of Grand Theft Auto 6, which has now been narrowed, the release date to fall 2025.
They do say those results, impairment charges, as you said, for acquisition-related intangible assets and business reorganization expenses of about $146 million to our cost reduction programs.
Yeah, that's interesting. I think we have to dig a little bit deeper into that. But I was just going through, too. I mean, we go through, because everyone's sort of obsessed on these launch dates here. Okay, so Scarlett's got her GTA in fall 2025, which probably means like summer 2027.
Bostic says there is still a lot of pricing pressure in the economy.
They've got a lot slated for fiscal 2025, which is really just right around the corner for them here. And that includes the new NBA game, the new WWE, Game of Thrones Legends, which I didn't know they were doing, and a couple others. But the question is, how are they going to get all this stuff out within that same time frame when they always have trouble just getting one thing out within that time frame?
That's a good question.
Yeah.
Maybe that's why the stock's reacting the way it is.
Yeah.
Interesting. I'm all for the Game of Thrones. What was it? Game of Thrones what?
Game of Thrones Legends.
Yeah, okay. All right, I can get on board with that.
Is the timing of that strange to you guys? The Game of Thrones game?
Why?
Because Game of Thrones was on years ago.
It takes a long time to develop these games, apparently.
Which I think is the point, because it takes so much money and long and time and talent to actually have to get the things up and running.
But yeah, I don't know. Obviously, I'm not in a position to make decisions on gaming franchises, but it just seems like that. I mean, I haven't seen Game of Thrones yet. I'm a little behind, but there you go.
Okay, dude.
I know there's
you
spin-offs
can't participate in this combo now.
I know. I don't. My washing machine doesn't. My washing machine doesn't connect to the internet, and I haven't seen Game of Thrones.
All right,
What's
guys.
wrong with me?
Are they related?
No. Maybe.
All right, guys, that's a wrap. Our cross-platform coverage, radio, TV, YouTube, Bloomberg Originals. The team will see you again, same time, same place, tomorrow.
And we continue our coverage right here on Bloomberg Television. When we come back, we're going to go live out to Hawaii. Salesforce CEO Mark Benioff set to sit down with us for a quick conversation. This is The Close on Bloomberg.
On season 2 of The Circuit, we're walking with the titans of banking.
You guys love these mean things.
Me too.
And driving a warship through the Pacific.
You're not the typical Silicon Valley founder wearing a black turtleneck. Like, how does that play?
I am a little bit of a caricature.
Taking you around the world.
So we're kind of in the middle of nowhere. It's incredible that this is the site of the biggest Netflix production ever in Latin America.
And getting you closer to tech and business leaders like never before.
You have our money, you've got world leaders on speed dial. That's a lot of power.
Sometimes I think I'm just riding the Bronco and hanging on for dear life.
You driving a Hummer is pretty badass.
That's what I'm going for, like badass soccer mom.
I'm Emily Chang, your ticket to the front lines of tech, innovation, culture, and host of The Circuit. Wednesdays on Bloomberg Originals and Bloomberg TV.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, The China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, The China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything.
Welcome back to The Close. I'm Scarlett Fu.
And I'm Romaine
Bostic says that firms can't 100% pass through prices. The economy is slowing. Says I'm hearing that businesses say there are a lot of limits of pricing power and not able to fully pass through input costs.
In fact, the Dow flipped into the red as you got closer to those closing bells, down 0.1% here on the day. No real fundamentals here right now. We're really just talking about a market just trying to figure out what the next step is going to be by the Fed. And you see there at the bottom of your screen that uptick that we saw in yields today, a 7 basis point jump in the 2-year yield. You saw similar moves across the other parts of the curve that really hit the interest rate sensitive sectors pretty hard here on the day. That includes the home builders, which as a group were down about 3% here on the the day. But the bright spot here was in Chinese tech stocks. We saw 13F filings from folks like David Tepper, from folks like Michael Burry, piling back into that in a big way here. Maybe around the margins in terms of the type of names that they're buying, but definitely a lot more conviction into that space here. That is the setup here on this Thursday afternoon, Scarlett. Meanwhile, back here in the U.S., we did have a few winners on the U.S. side.
Yeah, a lot of conviction in one of the biggest names in the S&P 500, and that would be Walmart, the world's biggest retailer. Up 7% on the day. That is the most since March of 2020. It's unusual for a name like Walmart to gain this much. By the way, this is a record high for the company as well. It had a beat and raise quarter. Same-store sales rose more than expected, and e-commerce was also a big driver of growth. On the flip side, Deere, the farm equipment maker, dropping 4.75%. That is the biggest decline in about 3 months.
Bostic says it could be appropriate to reduce rates towards the end of the year.
By at least $500 million. And at blame is falling farmer incomes, which of course leads to fewer purchases of Deere's expensive equipment. Not necessarily expensive, big ticket items. All right, our top story this hour is what is up with
Bostic says my outlook right now is for continued fall in inflation, which would make it appropriate to reduce rates later in the year, but nothing's locked in.
Quickly reset investor expectations for this fiscal year and next. Take-Two Management, remember, last month announced plans to cut 5% of jobs as well as cancel several projects. The stock tumbling in after-hours trading. Romain?
Bostic says I expect inflation to fall slowly and continued economic momentum.
Turn to the world of municipals, and it is time for our Muni Moment with John Miller. His new high-yield municipal bond fund drawing in buyers eager to invest in the riskiest segment of state and local government debt. $1 billion of assets amassed in just 5 months. Pleased to say he joins us right now. He's the CIO and head of high-yield municipal credit at First Eagle Investment Management. First of all, John, I think congratulations are in order. I mean, I think when you sort of made this move, everyone knew you were going to attract a lot of money, but not necessarily that much so fast. What are you going to do with it, John?
Oh, well, thanks so much for having me. And we've already been deploying it. I think one of the advantages is the timing of starting in on this investment process with the capital that we've raised. We're near 16 or 17-year highs in the yield of high-yield municipal bonds. So we've been able to assemble it, invest it into essential service type credits that out-yield the competition with no leverage and no defaulted bonds and no low embedded yield bonds. Well, so that's been helpful in terms of timing.
Well, that's what I'm curious about here is the complexion of this, at least based on what you've publicly released as of March 31st. 63% of the bonds in that portfolio right now are unrated and 18% were below investment grade. You know, John, that's a bit of a contrarian call right now.
Sure. Well, really, high-yield municipals, including the non-rated segment, are a subset of the overall municipal market, which is a very high-quality market.
Taking a look at the market ramp for today's session, the world's largest stock market hovered near all-time highs, with the Dow Jones Industrial Average reaching the historic 40,000 level on bets that interest rate cuts will continue to fuel corporate America. The oldest of Wall Street's 3 major stock indexes has been boosted by expectations of a resilient economy, low inflation, and strong corporate earnings. It took 872 trading sessions through Wednesday for the Dow to reach its latest 1,000-point milestone, or a 33% gain, with the index recouping all of its losses from the Federal Reserve's aggressive rate hikes over the last 2 years.
You know, you have to hunt for lots of different opportunities to
The last time the blue chip index surpassed 30,000 was in November 2020, amid a slew of market-friendly developments that unleashed animal spirits despite the ongoing pandemic. This time, the market is defying the old adage, sell in May and go away, with stocks on track for their best month since 2024.
Eventually, if we're in that $8 billion area, we'll have enough capital to really structure unique opportunities and situations for investors, but still stay very selective in this niche asset class.
And Romain mentioned that your new high-yield muni bond fund has amassed $1 billion in AUM in less than 5 months. What portion of your buyers are long-term First Eagle clients who are largely new to this particular asset class, high-yield munis, versus just brand new investors overall?
You know, we think that those are the top 2 categories that you just mentioned, both brand new investors and long-term First Eagle clients. I've spoken to kind of both categories of investors. I don't have the precise breakdown per se, but really this is complementary to what First Eagle already offers in terms of very specific targeted asset classes where they feel that alpha can be derived in an inefficient market, being a little bit different from the index and really delivering that alpha from individual security selection. So that fits the philosophy of First Eagle, so that's why it's a good fit within their overall portfolio and their overall base of clients.
I want to get some thoughts here on a couple of the holdings in the portfolio. Two of the biggest are Brightline, that's the big rail line down there in Florida, and another one was a casino in New York and an Arkansas steel mill.
Sure. Yes. Well, starting with the Brightline, many people are starting to know about the Brightline, but I would say it still needs more and more brand recognition over time, and will get more brand recognition over time. But they've accomplished a lot over the last 8 years. The system is the only high-speed passenger rail to be developed predominantly with private funds in the last 100 years. It goes from Miami to Aventura to Fort Lauderdale, Boca Raton, West Palm Beach, and the Orlando International Airport right now, for a total cost in the ground of approximately $6 billion because of a clever starting point buying Florida East Coast Rail. They actually carried more passengers than the Acela did in the month of March. So that's been a project that has had both some skepticism, but I think increasingly going forward, more and more fans are getting on board, so to speak. No pun intended. Another credit in New York that we've been involved in that you mentioned. There are actually two gaming facilities in New York that have been issued this year. One in upstate New York, the Oneida, and another in the middle of Suffolk County, Long Island, the off-track betting. In both cases, they're enhancing their venues for people who want to, say, gamble locally as opposed to taking the trip out to Las Vegas. And interestingly, in Arkansas, there's a project by U.S. Steel, and also there's a project by the same developers as the Big River project, which is called High Bar, and they're making rebar. So some corporate-oriented public-private partnerships can be issued on a tax-exempt basis when they're doing something environmentally favorable, like pollution control and waste disposal. That's how they issue those municipal bonds.
Got it. John, really appreciate your joining us. John Miller of First Eagle Investment Management with his high-yield muni bond fund. Now $1 billion in assets under management. We had mentioned the results from Take-Two Interactive. They came out in the last couple of minutes. The stock is tumbling in after-hours trading right now after its outlook missed the average analyst estimate, also was lower than what people had anticipated. So joining us now with more is Lewis Ward, ICD Research Director who covers gaming. And there are the numbers, and of course that is what investors are reacting to, but my guess is investors are just as much reacting to the release date of Grand Theft Auto 6, which will not be until fall 2025. Lewis, let me ask you a really basic question. Why does it take so long to publish one of these games? We've been talking about this for a long time. It's been highly anticipated.
Right. Well, the game development cost for a game like this is in the hundreds of millions of dollars, and it takes many, many years. So, they had a strong base to work from in terms of GTA 5. And so I think at the end of the day, they want the production values high. It's probably going to hit, PS5. Or the next Pro version of the console that's coming out with the higher specs, as well as the new Xbox console, which we expect to come later this year. So they want to make it look great and basically have legs for years on consoles, and then they'll follow with PC probably a year later.
Well, that's what I'm curious about too here, the gamble on consoles here. I mean, when you look at the industry, how it's evolving, and more importantly, how consumers use this stuff here, you see a future for consoles still?
Oh, absolutely. So, it's still huge in North America, Western Europe, Japan, and a few other countries around the world. A lot of people like the stability of those consoles, love the brands. And I don't expect consoles to go anywhere, or be eaten by cloud stream gaming or PC gaming or mobile gaming, particularly quickly over the next 10 years.
We know that Take-Two wanted to have exposure to mobile games, and it purchased Zynga, and perhaps that was not the right move down the road, given what's been going on with Zynga and how it's contributed to its bottom line. But do you see a future for a mobile version of GTA 6? I mean, is that something that they're actively working towards?
I don't know if they're actually working on a mobile version of GTA 6. I know that the current version or the latest information I have is that it's coming to consoles first, PC second. I wouldn't be surprised if they're noodling on how to make a variant of it available on mobile. I think that would make a lot of sense. I think Zynga, right, they did purchase it for quite a bit of money a few years ago. And I believe their advertising revenues have come in a little bit under expectations specifically. And so I think the part of the softness related to the Zynga acquisition is that the advertising market in a mobile context hasn't been performing as well as they anticipated.
There's been a lot of talk, particularly after the Microsoft deal, whether we would see more big M&A, not just, of course, Take-Two buying smaller competitors, but whether somebody might actually be interested in buying Take-Two. Is that something at all you think investors should consider?
Not right now. I think Microsoft has a lot of indigestion, quite frankly, with the Activision Blizzard acquisition. Sony is not crushing it with the acquisition, a few of them that they've made over the years, including Destiny 2 maker Bungie. So I don't expect them to. Nintendo would be a real surprise. They generally don't do that sort of a thing. So that is not something I would expect near term to happen. I think they're busy chewing on a lot of assets that they already have and they need to integrate with their existing systems. And so I expect that will take some time to work out.
Yeah. Also, do companies necessarily want to get engaged with regulators and go through another battle yet again? Louis, really appreciate your joining us today. Louis Ward of IDC on Take-Two's latest results and the fall 2025 release date of GTA 6. Coming up, we've got the top three. We focus in on the top three movers and shakers at the center of the day's big stories. This is The Close.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. From the world of politics to the world of business. 2 times a day at 1 p.m. and 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world twice a day at 1 and 5 Eastern, only on Bloomberg TV and radio. Context changes everything.
It's time now for the top three. We take a deep dive every day at this time into the folks at the center of the day's big stories. First up, Salim Ramji, the new CEO of Vanguard. He marks the first time the fund management company has hired an outsider, which Romain means the age of Jack Bogle is over and maybe the era of low fees as well.
Yeah, it'll be interesting to see. I mean, a lot's being made about this story and whether a guy like coming from a company that he's coming from is going to really shake up Vanguard. I mean, look, they've established what they are. They have an identity.